my mic is right. All right, we live. Yeah, my little fake little green screen that's showing to be like some old bootleg $1 little green screen in the back, right? Just playing around a little bit here. What's going on, family? Peace, power, profits. Your brother Afurakan Emporium. Again, just trying to put a little bit of a little work in over here at the other channel until we get everything situated at the other one. I want to be able to provide a facial recognition, not just today, but importantly so, if anybody else does come by the channel, looking for me, they'll see it as me, as if they can't see it with the other videos. But again, I'll go along with it, right? Again, just as always, I'm always, humbled by the idea that you guys are, again, hanging out with your brother as it is on this late Tuesday. Under the circumstance, we got this new channel we're trying to break in, so to speak, and again, it's going to really kind of mess up the ebb and flow of what we typically get from a lot of the family that comes through, and add, to the overall camaraderie to the chat and everything. But nonetheless, we still got to put forth some work and being able to be helpful, not only to you guys, but anybody that just passes by looking for the kind of content that we put out in terms of, just assessing the markets, doing things of that nature, right? So, man, I haven't moved this camera around like forever. I may need to put it on the. Let me try something here. 1 second. Let me try something here. I can do this here, but experiment with this little green screen thing. This junk is just like crazy. Yes, I got to get me a little green screen, the little thing you put behind you, I guess. But until then, we just experiment, like I said, so ain't nothing major there. All right, so, so kind of going over what we was discussing a little bit at the other channel, considering that the other one got somewhat flagged a little bit. Not flagged, but it's got a strike because of the infectious disease thing that we put up. So YouTube right now is going through this whole, dagger everybody until they get it right. In terms of they being a little extra cautious about content, and that's due to the whole issue during surrounding coronavirus. I mean, not only that, Facebook too. Facebook just been very extra as well, right? Super extra, right? With a capital E. And they're doing somewhat the same thing in some case when it comes to uploading certain content things. Not so much of the fact that you're sharing or even probably post some ratchet stuff, but you post anything that has to do with coronavirus, Dr. Fauci, Trump, anything of that nature, they offering it, right? They're not even playing around. They're getting rid of it. And they got this new fact checker thing over there, which is crazy because who fact checks the fact checker, right? Ain't that something, right? But that's what we're up against. So nonetheless, again, we'll make do with what we have. Let me fix this thing real quick too. Sorry about that, guys. Take this mess off there. Again, nonetheless, we'll make the best of it. So hopefully that's a little better. I was trying to work on this little green screen thing. I'll get it there at some point. Yeah, so as you guys can see, I got my Bear Grylls thing going, right? Got the beard going, like everybody in quarantine, just growing it a little bit. But getting down to business a little bit here. So just kind of discussing the market. As you can see, I always try to provide some information down in the description box. As you can see down there, we're dealing with a market that's pretty much in a slump for us today, I should say, at least for us today. And again, on the backdrop of everything that's been surrounding the market in terms of this new, trade war, the buckle coming back alive now. We got that to contend with. We got the Feds who have pretty much overextended their reach. Again, my opinion that they've overextended their reach in relation to the them now actually going out and buying outright ETFs, right? I don't know if you guys remember, maybe about a month ago, I discussed that at some point it's going to get to that level where they're going to actually go out and start buying and purchasing ETF, right? They're already buying, bonds, the treasury markets, things of that nature. All right, mortgage-backed lending loans, they're buying all the things like that. They pretty much are monetizing debt. All right, for anybody who may not be familiar with the term of monetizing debt, basically what they're doing is that they're trying to cater to each aspect of the market that may cause, any kind of major, to make you guys, mod you up a little bit. Y'all know how we do. Any kind of weakness into the overall marketplace as a whole, right? They're trying to swoop in there early and kind of put a backstop or a padding underneath these different entities, their feet, right? And so with that, again, we're talking about a major shift of currency that's coming out of these stimulus package bills. Not even withstanding the fact that we haven't even really put in the context of the reverse repo operation that's happening still to this day. That's another tranche of money, right? And then they have a very complicit financial district in terms of the banks, hedge funds, whomever, which is pretty much the banks like BlackRock, JP Morgan, Bank of America, Wells Fargo, who are there, again, giving these large swaths of cash from the repo market to obviously dump into equities as well. Now, typically, they've been buying a lot of the ETFs, in essence, too. Again, SP5, SPY, whatever, SP 500. And also, one of the most prolific ETFs right now, we discussed this, I want to say the last live I did, we were discussing the XLK, right? Tech has been on fire, right? So let's get right on to it, right? Let's not mess around because I'm not going to be on that long, right? I do want to get right down to it, right? Let's cook, right? As they say, like let's get them beans cooking, right? All right, so let's run over to, let's see. All right, yeah, let's go over here. The trading view real fast here. Oh, that's the wrong one. What is this, Microvision? Oh, it's stock twits, wrong one. Like, definitely. Come on there, the little bear on there, getting it in over there, right? Let's stock twits. All right, let's go to where we at? Here we go. There we go. Let's run over into the XLK, right? XLK, right? XLK. Real quick, let's do this. All right. So tech, right? So tech pretty much has been carrying the market for the most part, since we actually started rebounding off the lows when the Feds became very complicit, right? And, propping the markets up, right? So let's go to a bigger time frame. Let's go to the hourly chart and spread this thing out. Matter of fact, let's do 4 hour. It looks a little blotchy. Let's do a little something different. Let's do, come on thing. All right, let's go 4 hour. 4 hour don't look too bad. All right, anyway. All right. Let's do daily. All right, so anyway, so looking at Tech XLK, right, which is the technology stocks, right? We're talking about the derivative that's a part of the spiders, right? They got so many different materials, industrials, utilities, the whole nine, right? Healthcare, whole nine. Technology sector as a whole, again, has propped the market thus far to the degree where any kind of abnormal, volume coming into the market, inflows from, hedge funds, this, that, the third, even retail traders, has also helped benefit, the mandate, as I would say, of the Feds propping the market, right? Again, there's this underlying understanding that, they're trying to, at least until, America opens back up fully, meaning the entire nation has the green light to a degree, even though we know some states are going to be a little, longer than others. They're trying to green light everything, right? In terms of the market, to keep it at a point where if, and people go back to work, they'll at least have the comfort of having a marketplace that's somewhat at a perch point where if they want to obviously start taking some of the money they're going to get from their checks and also putting it into the market. Now, you would think it would be easier, for them, or a benefit to them, if they was able to kind of get the market at a little lower price. But evidently, what we've been discussing over the past month and a half, 2 months, is that, again, this is the part where Wall Street says, hey, the average Main Street trader or the average retail trader out there, if you're not already in at this point, we're gonna leave without you, right? The train is pulling out from the station, and again, we bounced well over 30-something% to a degree off the low since we hit, back around the March 20th, somewhere around that point, March 19th, March 20th, and the market hasn't seen any kind of natural downtrend since then. I mean, we're talking about, up, 0.8% on the day, down, up maybe like 2% on the day, and the next day or two we're down maybe like 0.3%, 0.08%, stupid stuff like that. So again, they're not letting the market fall and correct naturally, right? But within doing that, what you're doing is you're running away all the short sellers in a way where you necessarily don't have any kind of major spikes back up to the upside, based upon the fact that, again, you pretty much squeezed all the major shorts that was kind of, trying to short the volatility of the market out of there, right? You ran them out of there. And the market just kind of melting up on a low volume, melts up as we know it to be. Pretty much that just control, inflows coming into the market at strategic times throughout the day to stop any kind of implied volatility that may creep into the market. And so they're making, again, it's kind of like taking a lunch break, every 20 minutes on an hour, right? And you kind of get your body refueled, take a little break, you guys smoke a little cigarette, whatever you do, and you go back into the market refreshed, or you go back to work refreshed. Well, again, these banks, like, again, or these fund managers like BlackRock, JP Morgan, this, that, and the third, are doing that methodically. I mean, they couldn't have done this thing any more perfect. The way that they're buying the market at certain interval times throughout the day to keep it, again, perched to the point where you're not having any kind of flash crashes. Now, today is a little different story, a little bit. But ultimately, again, it hasn't been any kind of real volatility. And so we've seen the VIX come down substantially, from up there, well above the 50 point, which always, raises major alarm, in the stock market. When you have a VIX above 50, that's when, people get really nervous, meaning like, hedge funds, banks, people on that level, institutional traders, they get very skittish, right? Because again, at that point, they can't necessarily control or manipulate markets in a way where their large, inflow of cash kind of straightens the market to a T where, again, you're not really getting a whole lot of expansion, throughout the day in terms of up and down. If either it's going to melt up slowly, methodically throughout the day with small little dips in between. It's obvious in this case, if you don't have any really extended options in terms of contracts, beyond a week or two, it's going to really eat into the theta, right? If everything is part of the Greeks are not necessarily in your favor, well, you're not going to really make any money through that aspect, right? Just buying options outright. You may can sell some or do some spreads, this, that, and the third, but just buying options outright, over the past week or two, it's just been brutal, right? Unless you found those type of stocks that really gave you that level of, again, that type of level of expansion, right? The stock obviously moved beyond its ATR, its average true range, average trading range throughout the daily basis. We're talking some stocks that typically move about $5 or $6 on the day, up or down. Lately, they've been moving like, 3 or 4, but in a very, incrementally, fashion more so, be it up or down or just sideways stuck in the channel, and you're not, not in a position where you can really make a lot of money through the options, right? And so that's just a part of the game. Again, we're trying to make the best of it. And so looking at the VIX here again, when the market obviously fell from grace, right, due to coronavirus, this whole sheltered in scenario like that, we had a major gap up here, mad gap up. And, we ran basically down here from like $14 or all the way up to near like $90, near 90, but we'll say 84, 85, whatever. But it was on its way, right? Worst thing could have happened if we got the VIX over 100, it would have been lights out for the, for the equity markets, right? In terms of, the SP 500 and, the Dow, a lot of those components like that. And so the Fed stepped in at a point when they saw it particularly happening to that fashion. Discount here really was the one that spooked them, right? You had a pullback here, right, on the 12th, right, or going to the 13th. The buyers stepped right back in, took a breather, and then they exploded to the upside on the 16th, right? Again, you can go back and look at the date, March 16th. There's kind of variable news that came out that really caused that. But we knew at this point that the bears had really took control of the market, and they was trying to do, in terms of the bulls, were trying to do anything in their power, meaning the Feds, government, Steve Mnuchin, the whole crew, anything they could do to kind of stop this bleeding of equity stocks, right? Obviously, a lot of people, 401ks, pensions, were already at the point they had been kind of, saturated, and they were making money, obviously, because the market has been on a steady upcline since the last so-called quote-unquote market crash. But however, markets were still overbought. And the one thing that people fail to realize, despite the fact that it's good when you're making money when you long term, but like any aspect of a somewhat free market, it has moments where it needs to correct. And for a lot of new traders who have yet to get in, now they will have that opportunity to come in at a much lower price, right? So again, taking the VIX, from what it was, from what it's worth in terms of that point where the volatility came in the market, you had massive expansion in the market. Like days like this right here, like on the February 27th, those were the type of days where you had the market moving like 1,000+ points in a day. Like crazy numbers, right? Unheard of, 900 points, 800 points in a day, right? Same way you go to like the 9th of March, right? Big swings like this throughout the VIX, that means there's major expansion on the day in terms of day trading. So again, day traders were making a killing, right? We were making a killing based from the 20th of February, based up into around about 16th of March. Then after that, the Fed started clamping down on the volatility, income, bigger reverse operations through the repo markets to kind of stop a lot of that kind of implied, selling or fear. And the market just kind of, strategically, as you can see right here, again, just kind of pulled all the volatility out the market, right? I mean, to the point where, again, they just like, it's like someone says, no, can't nobody stop my shine, right? No matter how much they try. With the song by I think it was Will I Am, I'm going to keep getting stronger, however you go, y'all know what I'm saying, whatever. Well, basically that's what the Feds did. They came in and shut the party down. Right? It's like the police raiding the coronavirus party, which should be in anyway, right? Run everybody up out of there. And again, anytime they tried to do it again in the future, they were already there waiting on it, right? So you had no winning the fight. You pretty much had to succumb, to the vestiges of the government or the authorities and say, well, hey, if there's no action, I might as well start doing a little bit more strategic investing, meaning picking some nice swing trades and trading that level of the market, right? Oh, matter of fact, let me grab a link real quick, guys. If you guys want to come on, like I always show. Again, I know it's the new channel a little bit here, the backup channel, I should say, not necessarily the new channel, but the backup channel. If you feel like somebody could benefit from the content, by all means, intents and purposes, share the bill with them, right? Because I'll be doing all my live streams through here until I get the other situation rectified. But there's a channel if you guys want to come on the back panel here and discuss the market or anything just in general, surrounding what we do. There is that back chat. Again, thank you guys for stopping through. I see over Chris in the house, over T, over Brandon. Hey, good to see you guys. Peace, power, profit, family. Mr. Maniac in the house, good to see you, family, as well. All right, peace, power, and profit to you as well. All right, and anybody else that may be watching a little bit in the back, inside, obviously being busy or just kind of checking everything out. Again, so real quick, so that whole scenario in terms of where the markets have kind of pulled back recently, and I'm saying today, obviously, because what do you see right here, right? And it's the reason why I really want to come on and explain today a little bit. What do you see right here in terms of this big old thick yellow banana line right here, right? Well, we already, for some of us that are new to this and still learning, but for some more seasoned traders, you know this thick yellow line has to be a major type of indicator, right? And so it's signified by looking over here. Obviously, on top of my trading view here, you see my little ledge over here. You see that in this yellow, it's showing that it's an EMA, right? Which is the 200-day moving average. The same way we saw the S&P hit the 200 moving average, a few days, well, about a week or so ago. I was telling you, once it gets up there, that 200 moving average, it's going to get rejected, right? And sure enough, it pinged up against it and got rejected, right? Right. So let's go over there real quick and show that, that beautiful beam footage, right? Not only once, but 1, 2, 3 more times afterwards, and got what? Rejected. I mean, again, the Kimbe Mutombo style, waving the finger, no, got rejected. And today got hit harder, right? Because again, not only the fact that we knew that a lot of the economic headwinds, the macro data was coming out surrounding the overall global market, but also even our markets, and that's the damage that's being, levied on us due to having this shelter-in-place mentality, where people can't necessarily go out and procure income, or whatever the case. Again, there's a big deficit there in terms of America being able to produce what they call a livable wage in terms of a GDP, right? Our gross domestic product, as an aspect of all of us together collectively. There's no money being made, to really, make this thing kind of worth the idea that we're sitting home, worth it for the government. And I'm saying strictly for the government, because even though we need the money, but for those who need these kind of data points to kind of brandish whether or not they feel like they're doing a good job or not, which is always skewed to a degree anyway, well, they're looking at charts right now because they figured out that this whole talking point that we was dealing with from 2018, 2017, let's say latter half of 2017, all 2018, somewhat, and then 2019 was that, you know, this is the best economy ever. It's the strongest economy ever, especially last year. It was just like, if the rhetoric was just nauseating. We're the best economy, we're the strongest, just that and the third. And again, Rona comes along, shuts you down about a good week. A week and a half, they were already crying, right? I mean, they were already crying. I mean, a week in. So apparently we was not that strong as things seemed to, you know, have been kind of, you know, perpetrated to us, that, you know, we were such a solid, you know, investing community. When I say a solid investing community in relation to our global partners out there, that, you know, America is a place to, you know, where you want to be. Now, strategically, in terms of our collective worth value, of course, you want to be in American markets, right? Because they're the most liquid and the most, you know, not the word I want to use, the most lucrative markets to trade. I was about to say liquid, right? Liquid too, but they're the most lucrative markets to trade in, right? Because again, the level of the technology stocks that we have, the level of the, you know, all the other different outlier stocks that we have that make up our economy, there are a lot of, you know, other nations, you know, would, I mean, love to have in their markets. Well, they come over and invest their dollars into our, you know, our tickets or our tape, you know, to try to benefit off some of that volatility, right? You know, to benefit off some of that liquidity, I should say, excuse me, right? So they want to be a part of being able to kind of stack some of the USD dollars down as well, right? And so again, it's just going to show you now, it goes to show, you know, that even though that was a magnificent extended party, and I'm saying this is an extended party, going back to May 23rd, all the way up to the point where we hit that 20-day move now, it was around about the 29th of April, right? A couple of days after my Eva's Earth Day, right? Get excited, right? Pull back, right? Market even, I mean, didn't even flip. I mean, all you see basically from off this point here is just what? Higher lows, right? Right? Higher lows, right? Higher lows, right? Higher lows. Even on the pullback off the first tap of the 20-day move, now we pulled back, tapped it, and guess what? Feds came right back in. Greedy Wall Street would not let this thing sink. Came into the 8th of May, which is obviously, you know, talking about last week a little bit here, you know, closing out, and the market just kind of went sideways, just destroying all kind of intraday option traders who did not have the specific type of stock that had level of expansion. And again, this whole idea of putting a clamp on the volatility, trying to save and preserve the market to the degree where they can try to hurry up and open up the economy, as if that's going to be a revolving catalyst to say, well, this is a great time to buy the markets back. Look, see, we're back to work, right? That's what this whole, you know, shenanigan, Ponzi, you know, this whole propping, this whole, you know, fake manipulation that's been getting out of the markets has just been set in place where you can obviously see what they were trying to do, right? They were trying their best to try to sustain the market up near the 20-day moving average as much as possible, because they know that's a major sentiment change in overall market, expansion, new buyers, things of that nature. They wouldn't necessarily cry about the market being overextended, overbought once it would have crossed over, if it had crossed over. But what we're realizing that they took this thing too far, too fast, right? They went too far too fast, I should say, right? And because of that, the markets were hitting some very key levels of froth, as we know it to be. So a lot of sell signals are starting to kind of branch themselves, especially when we start getting up above this point here around about the 285, 280 point, where you would think anybody in their right mind would have taken profit off such a staggering move off the lows around 217, 218. Most people got in around like 220, 222. I remember that day like yesterday, where the market, I remember like yesterday, I think I was sharing that with you over Chris as well and a few other guys, where literally the Fed spent $1 trillion in one day to get the markets off the lows that particular day. I remember like yesterday, I was watching the pre-market and the SP was taking. I was like, yes, we're finally going to break 220. We can easily, skid down to maybe like 211, 210, maybe even down a little lower. And man, as soon as I began to really get excited, I saw the headline came out And next thing you know, Jerome Powell, hey, we're gonna do everything we can. You know, I heard what's the guy over there at CNBC, the bald head guy, whatever, the guy that does a lot of the macroeconomics when it comes to the Feds and this, that, and third. Steve Leeson, that's the name, Leeson. He comes out. This is the biggest bazooka ever, guys. The Fed has gone bananas, basically, right? That day they dropped $1 trillion into the slot machine called the stock market, and the market reversed off the lows from 217 and went all the way up to like 227 and 228 and changed in a matter of about an hour. It pulled back some, it gave back some of those gains again. It was funny watching because it kind of came all the way back down to like about 223, 224, right? And then it kind of hovered and climbed a little bit, chopped out, stayed in that zone. The next day, they gapped it up and set the high. After that, it was lights out. It was like goodbye, right? It was like goodbye, right? They were pretty much, what they call dog whistling to all the hedge funds, all the major banks, all international players, anybody that had the opportunity wanted to get in on the market that missed the great gravy train ride that they had back in late 2017, early 2018, mid 2018. That was like a dog whistle. And I'm saying that because if you go back on the previous chart history, let's go back, right? 2017, right? 2017, it was rough around 2017. I should have said went that far back, but just in terms of that, because this move right here was what caused a lot of people to get excited about the market when we had that nasty pullback, going into the Christmas holiday of 2018, right? Going into 2019, the market pulled back, just ugly, right? Off this pivot here, off this point around about 295, 294, and it flushed all the way down to like 263, right? Excuse me, 234, so around that point. And so that was a gift for a lot of people who had missed the ride from getting in up near this point here, right? Or getting in from around here. They was able to get in now at a much lower price, right? And so they rode, a nice wave back up in 233, basically 232, all at like 339, well over 100 points. I mean, this crazy, stupid gains that the market was able to put up pretty much the entire year of 2019, and then all that came crashing down again with one virus, right? One pandemic, one bubble bursting moment that pretty much got exposed the market for being weak, as they said it wasn't, and so they had to backpedal. And again, realize that this is how markets are supposed to move in terms of natural correction, not like this, obviously, but in terms of supposed to have that natural progression of kind of sideways, right? But they refuse to let that happen. They refuse to let some of the indicators and oscillators cool off, and refuse to let old money get recycled with new money, right? Only people that recycled money was people who had major money, like hedge funds, institutional traders, people like that, fund managers, banks. They were the ones benefiting off this more than anybody, right? Retail made some money in between, but it was not the type of buyer's market where you think a person's got in for the first time saying, well, should I just get in, for the long term, and they were buying it up here around what, 310, 300, 316, 320, not to say the market's not going to go back up there at some point, but the analysts at that point were still just overly aggressively still bullish on the market. And I'm saying that because look right here on the bottom here at the RSI, what do you see right here? Overbought scenarios right here around about end of November, going into December, end of December, just overbought. The market just stayed up here in the overbought session at level, pretty much for the entire 2 months. Couldn't make this stuff up. Indicators and oscillators don't lie, right? Basically about the entire two months, 2 or 3 months, close to that. It just stayed in overbought territory, religiously, like it was just, no way this market was coming down. And the rhetoric came out every single day. Trump was tweeting like never before. Jerome Powell, accommodated like ever, like the biggest dove ever in the Fed history, besides probably Ben Bernanke, right, which was another madman. Again, we dropped some of that beautiful Ron Paul footage on him, right? That snake, right? I mean, these people just print money like it was just going out of style. So again, it becomes addictive, right? You can tell they got an addictive vibe. They became mesmerized by the idea that they could just print all this fake money out of thin air and give it to banks and say, hey, go out there and buy stocks, run the markets up, right? Benefit off of it, right? The rich kept getting richer and the poor had no clue, right? So again, saying all that to say this, again, look at where the market's at now. Market pinged up against this 200-day moving average 3 times here, 4 times, got rejected hard this last time. You see it pulling back today. Hence, that's why I titled the video today. You know, the market. Oh, sorry about that, over Chris. Y'all know I get to talking, man. I forget to add y'all to the back. Forgive me, brother. Right, the market pulled back, and again from there, you know, we just been stuck in this kind of, you know, this kind of, you know, unforeseen territory. Now, when I say unforeseen, meaning the bulls have been having it so good over the past literally a month or so that now they're faced with the opposition, whether or not there's still any kind of major juice left in the tank to push it higher, right? Again, to get above that 200-day moving average, which is again is a key marquee point of resistance, you know, going forward, to the degree where if they can't really turn it or keep it in a chop zone, because that's what they're really trying to do. Like I said before, you got to understand what they're trying to do. They're trying to keep the market hovering in between at least this bottom half of 280 up to roughly around about there 295, right? And break out of this channel at some point, right? Again, it's not hard to see what they're doing in terms of, you know, keeping the market in a ugly little flat little channel here, much as possible, and that's to try to, you know, kill off any kind of particular, you know, bearish sentiment that could come in and kind of what, you know, cause a lot of this, you know, cause a lot of volatility to become, you know, rampant again in the markets. Again, we're trying to keep the VIX from waking up. And so you say to yourself, you know, what's so important about, you know, them wanting to do just that? Well, it's because, again, if they can recycle out some of this repo operations money, because that's what they do. It flows in, you know, 30 billion today, 50 billion tomorrow, 40 billion. That's 40 billion. At some point, they got to recollect that money back from the banks, right? Account for it, and then distribute it back to the banks again for the next wave of repo operations that they're doing. And that's also now, that's becoming secondary, because outright, as of yesterday, again, per the news, the Feds came out pretty much and told everybody they're going to start buying ETFs outright at this point, right? They're going to start buying ETFs outright, right? So again, they're doing everything in their power to save, you know, Wall Street from having any kind of scenario or what they consider to be a bad day. Yet again, Main Street is sitting at the house, you know, pretty much, you know, one bathroom a moment away from just going, you know, from being interested, right? I mean, it's starving basically, right? Starving, right? And there's still a lot of, you know, bureaucratic red tape that's happening in Washington right now with this next, you know, wave of stimulus that's supposed to be coming down the pipeline supposedly. Trump is pretty much already, you know, dog whistle that he's not in a rush to deal with it too, which is interesting, because again, they're trying to see how this kind of reopening is going to, you know, unfold. And so again, it's like it's like a grand experiment, right? It's like this grandiose experiment where they're utilizing, you know, people's body, their health and wellness, their financial disposition, all these things, like a big mad case study. And you're the one that's been experimented on. I'm the one that's been experimented on. But the people who are benefiting the most off this, again, are, you know, the greedy CEOs who's getting bailed out, those who are already kind of well-to-do. Again, it's not slighting against people who are well-to-do. But again, when I'm saying that, because they're getting more than their fair share of the opportunity by way of the stimulus packages that are coming through the markets, right? They're benefiting of weak balance sheets, bad business practices, egregious, you know, irresponsible fiduciary responsibility when it comes to their shareholders and their company as a whole, in terms of their reckless, you know, mentality about how they value, you know, future potential headwinds that may come about. Again, not saving for a rainy day, building a house of straw instead of brick, right? And again, still do not, you know, beautiful big dividends and buybacks, things of that nature, right? And just running the muck off all, you know, pretty much all this free taxpayer money that's been coming in ever since, to be exact, you know, around about September 2019. So this is nothing new in essence to how they've been trapping the market. And I say trapping, when they're trapping within the market, you know, like we say trapping, y'all know what I mean, and benefiting off all this kind of free money that's coming in by way of taxpayers, right? Taxpayers' money in terms of the repo operation. That money is not just printed out of thin air. It's coming from a prolonged debt increase that's supposed to obviously be fulfilled, you know, back through long-term, you know, taxation. At some point when they begin to raise rates back, obviously a lot of that money is going to go back to somewhat repair some of these repo operations that they're doing right now. Now, interesting enough, as I always keep saying, well, Main Street really don't benefit from that, right? Because I mean, you guys know as well as I know how many people y'all know, you know, within your household, your peers, whatever, are investing in the stock market. They may have a 401k, okay, get it. Thrift saving plan, okay, maybe. 529, maybe if you got kids like that, you know. But outside of that, they're not really benefiting, right? Wall Street, again, is continuously getting fatter, and the so-called hardworking people, not necessarily called them poor, but the hardworking people are still, you know, getting railroaded. And so again, just looking at this again, you got a market that's stuck in a nasty little channel here, and they're trying to do everything in their power here. Again, look at when it started really becoming relevant. Even though you have this little pullback here, doesn't matter. You're talking about way back since April the 14th to where we are here today around May 12th. Almost an entire month of stuck in a nasty little ugly little zone right here. Now, if I drew the, you know, the diagonal zone, of course it'll look more intricate. You know, draw it off the lows to where we're at here. Draw the bands up here. Again, it'll show you that, you know, we're trying to ping up against some, you know, certain points to try to get up and test this 300, right? That's where all roads will, you know, lead us at this point. If the really, you know, Feds really had it their way, and fund managers had it their way, we'd be up near 300 right now, right? But again, there are contrarian traders out there who are not necessarily, you know, homebound, meaning American-based traders, and they see this just like everybody else sees. Same way we're seeing it right now. All this 200-day moving average being a kind of major gun line. Tell them about the gun line, boss. Tell them about that gun line, boss. Right? They can't break above that gun line. Right? They cannot break above that gun line. Right? And that's important. You know. Hey, what's going on, brother name? It's good to see you, family. I just get a chance to see the little YouTube back chat. What's going on over David? What's going on, family? Peace, power, profit. All right, let me give you guys some rents over here to you again. Y'all know I give everybody rent. Well, not everybody. Y'all know I go. I gotta know you. Right? I gotta know you. Gotta know you. No, but you guys are well over here. No, but seriously, hey, what's going on, family? Mr. Maroon Man, what's going on, fam? Right, peace, power, profit to you. Greetings to you, family. And so again, what we're seeing here, just real quick, again, I want to kind of get to the meat of the matter here, right? Got me over here, getting it in a little bit. All right, excuse me. Let me take a little swig of my little sea moss here. I got my sea moss and elderberry. Right, don't y'all be talking about me. Don't y'all be talking about me. But y'all call Uncle Garfield over here because y'all know they ain't about the health and wealth stuff. They want you to get a shot. And not take care of yourself. Got a little sea moss. All right. Got some organic hard press, or I guess it's hard pressed apple juice, coconut water. Again, sea moss. You know, something simple. I didn't even add anything else to it, but it's super delicious. Right. Super healthy, loaded in minerals, vitamins, the whole nine. Right. Doing my little commercial spiel. Right. Shop with your brother, Emporium. I got the purple and gold sea moss. Check me out. Which I do. Seriously, all seriously. And I got authentic African culture products as well. From pretty much maybe like 30 or 40 different nations over there in Africa. I got some masks, all kinds of stuff. Anyway, yeah, let's get back to work though. So again, all I'm saying is watch the market here, guys. This 200-day moving average is pretty much your litmus test to really strategically place your trade, especially if you're trying to do the market to the option or just find the market out right. You want to watch this key levels of support, which is down here roughly around this 280 point, right? Up to the point around about 295. Now, as I'm always saying, when we split the difference, right? Y'all know I always have a little thing I say, you know, you want to do like a plus minus ratio of that ATR or the channel. You want to split the middle, right? So right now we're basically trading right at about the middle point of the support, right? The demand zone and up into the supply zone, which is around this 295, right? So right here is a very ambiguous part, you know, place or position to be in, right? If you're trying to really find a clear direction or where you think the market's going to go. Now, ultimately, as far as today's trade, well, those who've already got short up here near 283, right? They're eating today, right? They're benefiting off this, right? And a lot of stocks that were kind of overbought going into today, some of those are obviously cooling off a little bit. Now, again, tech sector, three-headed monster, right? Even though it's like about 6 or 7, that's really good to say. You can say in terms of the tech, you know, ETF, the XLK are just ruling the roost right now. I mean, they got all the volume, all the money. Everybody's buying those stocks hand over fist, right? If not individual, they're buying the ETF itself, XLK. Fund managers, dropping billions, not millions, billions, right, collectively into the XLK because it's a safe haven right now to hide out in, you know, until we get a little bit more time unified best in terms of what this market is actually going to go. And they're doing it again in the auspice that if they get this thing to break above this 200-day moving average, the market's going to be like gangbusters. So I'm already telling you right now, it's not like it's a secret. We break this 295 and close above it. Y'all know how this stuff goes. You have to close above it. Just going above it, throughout the intraday and coming back in it is not enough. You actually have to close above it. If it closes above it, go ahead and start buying some 302 calls, some $300 calls, some 298 calls, right? Just go ahead and buy a few of them. Right? I'll be the first one to tell you. I typically don't tell people to do that. Again, disclaimer, I'm not a financial advisor. I'm just giving my opinion. But if it was me, right, if it was this guy, I'll be buying some 298, 299, $300 calls, like gangbusters. Because again, they're basically going to, from that point, they will definitely try to, run up into 300. Because keep in mind, there's a lot of smart strategic short sellers sitting right up here at this 295 resistance point with their short positions, either through puts or just equity shorting the market outright, right? And notably so, they should, because again, think about where the market came from, right? Think about where the market came from. And I mean, again, we're talking about a matter of about a month, right? A little over a month. April, obviously a little bit over a month at this point, excuse me. But, but I'm saying the ideal of it, where the market just kind of, went from here to way up here, in a month, and then these little, 12 days since then, or 30 days since then, against the 12, going back to that point. And they're close to that. Again, you already, inching up here, up against some real major levels of resistance here, where the market has pretty much said, it's time to take a little small cool off break, or a little, take a little nap, right? It's time to take a little dirt nap, right? And believe me, the S&P 500 definitely needs to take one, because this has been proven to be the most manipulated ETF of late of 2018, latter 2018 up to 2019, at a point where it has really killed a lot of the old school fundamental basin traders that are have made their living trading smart like we're all trained to do. It ran those guys out of business because the algos, the high frequency algo trading bots, are demolishing the markets. They're killing all aspects of fundamentals. They're killing all aspects of technicals. It's a strictly price action oriented market where it's strictly driven by headline news and headline news reactions only. And so how do you plan for that? Like, how do you know, when typically we're waiting for an 8K or a 10Q or a 13L, and hedge funds are rebalancing and all these kind of things are happening, you kind of get ahead and say, okay, we know the company's going to drop the risk release, based upon this, that, and third. Now, it's not even that. They're dealing with, we're talking about the geopolitical aspect of the markets are being controlled by people who pretty much taking the market hostage in terms of the Feds, quote unquote, the Treasury, right? And the Trump administration, along in tandem with the, in cahoots with the banks and the hedge funds, and they're just pretty much got retail traders, like a dog leash by the neck, right? They're just leading us around by the neck because we have no way to clearly put forth any kind of natural, solid, fundamental analysis degree to really map out the market where it will be week over week. It's like, okay, well, we know the Feds are buying the market up. Well, what do? Just go long. Well, dude, the market's up in there 293. Go long. Okay, somebody does that. What happens today? Doof. Right? That person eating crow right now. Right? That person eating crow right now. Because again, what it does, it produces a level of what? Complacency. Right? It produces a level of complacency, and we get off our squares in terms of being able to learn how to do what? Proper due diligence, right? Proper technical analysis, proper fundamental analysis, and make good decisions based on that. So again, and showing you all that in terms of the SPY, this is why the VIX is very important right now. Right? How that little song? This is why I'm hot. This is why y'all know. So I've been hearing songs still, and I'm like, man, young folks got it now, right? But this is why the market is hot right now, right? Or it's getting ready to cool down if the VIX got anything to do with it. If the VIX have anything to do with it, it's getting ready to cool down. Now, this is just one day, but what's most important about this? Look at this. What? This thick yellow line. What is that thick yellow line? Right? What is that thick yellow line? Right? Hey, what's going on, family? Mr. JRH, what's going on, family? Give you a wrench, mod you up, you old school, right? What is that thick yellow line right there? Right? Right, I'm sorry I couldn't even see the back check. I need to go over here and look at this back check a little bit more. So yeah. T crazy when you see my drink Jesus blood and Merlot. You're a mess, bro. You're a mess. Yeah. So what is that yellow line, guys? That's that what? That 200-day moving average, right? That's that gun line. Again, y'all know my little movie life, right? Tell them about the gun line, boss. Tell them about that gun line. Right?
Yes, sir.
You bring out there that gun line, boy. We're gonna shoot your back out, boy. They're gonna shoot your back out.
Yeah.
So the market is literally just that, right? That's what that part with what is his name? Miguel Nunez, whatever his name is, when he gave up. He's like, man, I'm out of here. He didn't want to go home. He's ready to get out. And he's like, you go across that line, boy. That took a pick out, boy. And they laid him out, boy. They laid him out in the North Field. That's basically what the market looking like right now. You know, if you think about it here over Chris, you know, we have a nice, this was an easy read, though. Again, this is why you have to look at all these different, you know, so-called sentiment, you know, plays out there, or things that have to do with overall price action sentiment, investor sentiment, as these major, you know, tickers like, you know, the VIX. Again, some people look at the Qs, obviously, in relation to the XLK, Tech, Nasdaq, like that. But ultimately, two of them I always say keep close to you is number one, SPY, right? SPY, right? SP 500, and the VIX. Now, even though you can, if you already know that the SPY is going up, you know the VIX is coming down. Now, but what makes it more of an intricate trade is that if you also keep your eyes on the VIX, when you see scenarios like this, when they kind of bang up against certain indicators like that, to the level of the minutia of it, that's when you want to, you know, really pay attention to, because what do you have right here? It came out and kissed that 200-day moving average, and what happened? Look at that.
Shut up.
Right, that ain't by accident. Right, that ain't by happenstance. Right, that's that contrarian trader said, okay, y'all bled it enough. And guess what? People who are long, hard-term bullish traders now also turn what? Hedge traders. They're hedging their long positions now, because this is a major pivot point, or a what? Reversal point, as we know it to be. And even the doggone candle, the previous candle before, signal it. Beyond the fact that it, you know, again, it tapped the 200-day moving average and bounced off of it, right? But that's exactly what you got right here, right? And right now, if you look at it's after hours, obviously, at this point here. Let me run over here to my. Let me run over here. Go to my little channel here. All right. Let me go to. Cause again, we bleeding here after hours. Obviously, you know, we bleeding. You know, market's pulling back. You know, it is what it is. You know, yada 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 yada, as they say, right? But again, you couldn't make this stuff of how easy it was to short the market today, right? And I'm saying that because you had to have seen that point where the market kissed the 200-day moving average on the VIX side, and the buyers, because you go look at the inflows at that point, you go look at the TVIX, right? TVIX, right? You go look at the SQQQ, what is it, the TQQs or SQQQ, one of the others, the inverse of the QQQ, and you saw all the inflow start to come into those stocks, right? Especially the ones that are traded through the option market. It was kind of like a given, to a degree, right? To a degree. But again, that's what we study for. This is what we learn. This is what we posture our time, you know, in a way where, you know, we take time to learn these things. When we see it in the future, it's like, okay, I know what this is right here. I know what's happening right here, right? I know exactly what's happening right here, right? So that's basically what we got right there in that moment, where it was a clear indication. And I, you know, I was sitting there telling myself, man, I wish I had got a chance to go live yesterday and share this with the family, because when I saw it, I was like, man, I got to tell everybody about it. And I didn't get a chance to even think about it because I was doing so much. I was so busy. I didn't get a chance to even share with our group, a little Facebook group. But I was like, you know, I was like, man, just, you know, going in today, I was going to be like, hey, be a little cautious. All right, I see a major, you know, reversal or pivot, you know, indication started happening, you know, in the markets here. We may get some turnaround. And what really took me to even more was that yesterday, if y'all watched the after hour session of the market yesterday, what did the futures market end up doing? It ended up dumping. Right, it was on the back end of all this other stuff that they always try to put the headline news attached to it. You know, it's because you know the whole issue coming out of Sunday was like Fauci and, you know, some of these guys never to go into quarantine. Then it was, you know, Trump, you know, having issues with China in terms of want to remove some of the you know, these federal pension inflows into China where they can't have, you know, access to them. Right, the whole idea that them trying to put the tariff trade war talk scenario back on the table, and then him retracting that statement saying, no, it's not time to deal with that. Right? And then China put him up saying, hey, you know, we're not going to deal with you anyway, right? Because you up here, you know, name calling saying we start the virus. You know, again, they catfighting, right? But more importantly, all that stuff stole the headline. And so if you wasn't paying attention to this, meaning I'm saying this, meaning the this 200-day moving average on the VIX here, this reversal point here, then you miss out on the great opportunity to buy you some puts. In terms of the S&P 500, right? I mean, you had to say, well, you know, I can definitely buy, right, some 290 puts, right? The 290 puts, obviously at that point was going to expire on the 13th because we already in out of the weekend going into today, right? The contracts for today, well, if you bought them Monday, obviously would have been expiring based on what? On the 13th, which is tomorrow. So you had a whole 2 days as opposed to 1 day if you bought the intraday scenarios on what? On a Monday, right? For the puts, right? So again, oh, that's my neighbor. I'm like neighbor out there with a little motorcycle and a little kid. You know, one little miniature motorcycle, a little small, little expensive joint. Like, yeah, whatever. Anyway. So yeah, so that was a key indication, guys. That was no-brainer, you know, scenario in terms of just buy you some put, like you'd have bought the 290s. They were not necessarily that expensive. And I'm saying that to say because again, it's hindsight, but again, that's why we learn how to read these key moments in the market when we see the importance of a pivot or reverse. Here's how you get that bag. So let's roll right on over here. All right, let's roll right on over here. Give me 1 second. Give me 1 second. All right, 1 second. Okay, here we go. All right, look at here, guys. Look at all this cheddar, right? But it's like, look at all this cheddar, right? Look at all that cheddar. And no, I don't make my life works to be, you know, contrarian to the market. I'm just a realist, right? And I'm always gonna give people the bad because when moments are great, you don't have to think about it. Just ride the wave. But when it's bad, you need not to be thinking that it'll be great because the Feds have everybody so, you know, confused. They've lost a lot of their own, you know, intuition, their ability to be, you know, keen at being able to read the markets from a natural eye perspective because again, they've taken it hostage and they're just buying everything up, right? And so everybody thinking the market's going to go up every single day. Well, it's not the case because guess what? What do we have right here, right? There's my brother Phil just came in the building. Peace, power, profit to your family. Good to have you in the house. Doing well, right? So what do y'all see right there? I mean, again, beyond the fact that it pulled back here, right? But it was a given because if you look at the overall, let me back it up. Right here, right? What you see what yesterday's closing price, right? Going into the 11th, basically coming out of Monday, right? You see right here, what do you see? Look at those peaks up there. What do you see? If we talk about that in terms of, you know, peaking out up there, what do you see? What kind of pattern is that, guys? Coming out of Monday, coming out of Friday into the, what you call it, over Chris? What you say?
Well, it's a triple top.
Triple top, right? You say triple top, brother Phil. What do you say? Triple top. What do you see? Coming out of Friday until today. What pattern would you say that is?
I'm trying to get it up on my big screen. Hold on 1 second.
Oh,
I'm still on my phone, so yeah.
Oh, no worries.
Up together.
All right, anybody in the back chat? What do y'all see there? All right, I got a little bar kind of up there. What do y'all see right there? All right, let me make it even more somewhat kind of revealing too. Right, over Chris says triple top. All right, anybody in the back chat? What do y'all see right there? Again, I'm just showing you plotting out some key level, you know, indications that why you need to always stay, you know, that kind of sharpshooter type of eye in terms of when you see these natural progression patterns when they start to form or, you know, unravel or form, you need to be able to start to prepare yourself, right? So let me see what you guys said in the back chat. All right, over T says some waves, right? Ocean sirens, right? He's still learning. I like it though, but that's how you learn. You got to just jump right in there, right? Over Mr. Jari says triple top, right? But a double top today, right? So on the extended chart, because again, you know, we always got to go back and look at what past performance, right? If you look at this from a place going back before the 11th, right, on the 8th, right? 8th was Friday, right? You see that little peak? We got a peak up there on Friday, right? He said death cross, doomsday, etc. Right? He learned about death crosses, right? To a degree, you learn it. There you go. That's how you learn, right? So, again, ultimately, you're not going to be wrong if you say triple top, even if you start to even say double top, right? If you say any of those, you're still right. Even more staggering is if we see it for what, how it really played out. But it's so, it's weird because when we study the idea of what the head and shoulders is, right? It's a broken head and shoulders, right? Just to kind of really put a real ugly stamp to it. It's a very broken head and shoulders. Because you got a peak up here that ain't the same as the head, so-called, right? And typically you always do what? Neckline to what? Neckline to the head, which shows to be supposed to be what? The level of what? The pullback from that point of what? Peak to trough, right? Now, this drop today from 290 down to 285. Remember, I say again, it's going all the way back down, trying to test that 280 point, right? Well, what do you see? You see, again, you talk about maybe, and we use this point here, right? That point of support, 291, 293. So you talk about a measly 3 or 4 points, right? The neckline to the drop today would be what? 290 what? 291 to around about what? 280 what? 288? Somewhere around there typically. It would be around that kind of level of expense to the downside. But we blew past it. We blew past it. Why did we blow past it? Anybody? Why did we blow past that 288? I'll even be liberal and say 287. Why did we blow past it? Anybody? Hey, OT said funeral. Right. Why did we blow past that 288, 287? On a particular so-called quote-unquote head and shoulders pattern that was forming, because it's typically supposed to only pull back to the level of what the neckline, from that point of the neckline to the top of the head, or you match that kind of level of a so-called fulcrum, and they call it like a fulcrum to a degree. So when you say test
those old levels from the 7th.
Right, to a degree, and good point. But also, guess what? Let me pull this back up. Right, what do you see right here? Gap fill 288. Right, bulls didn't want no smoke. Right, profit taking, massive profit taking. Right, what do you see from this point here? 287, that's why I say 287 is going to be liberal, right? Because come down to the 287 pivot point, right? Even if you want to come from the top of the head down to the shoulder point here, or even if you want to come down this far, right? 289 and 293, right? You're talking about, again, roughly, again, 4 points, 5 points, granted, but we blew past that. Another major gap right here, massive gap here. This was a massive gap here, right? This is an outright criminal. Y'all know what this is. They're just outright criminal how they just doing it. Doing anybody that's going to trade into the market at this point, where you had a gap up base from 283, right, 283, 284, somewhere around there, right, all the way up, up there to that point again, roughly around about 287. You're talking about a rough about 4 or 5 point gap up. On a whole lot of, obviously, go back to that day, you figure out, well, what was the reason for it gapped up like that? Then, like we always been saying, a whole lot of fluff. Right? The news has just been a lot of fluff. And just outright just insanity of the feds, just pretty much just squeezing bears everywhere they could. Right. Yeah, making it like a game or something. Like it's just they having a high from just seeing the market that doesn't deserve not 1 ounce of the price discovery that is receiving at this point in the game of understanding what we're dealing with in terms of the economic headwinds surrounding the coronavirus, the global shutdowns. Data is coming around the world. Everything, right? The currency rates are all out of flux right now. Again, over Chris, you trade the forex market, you know exactly what I'm talking about. The USD dollar stronger than ever. At a time like this, the USD dollar just completely just railroading everybody's currency, right? And it's all because again the Fed is complicit again in propping up the market to the point where everybody want to run and get USD dollars over these other so-called weaker currencies because of the fact that they just can't compete right now. Right, they don't have the power of the printing press. Some of these countries are already at 0 interest rates or negative interest rates, so they don't have any more, power left, no more bullet left in the gun. Again, a country like Japan, many others, Europe, they're struggling right now. They're going through a Brexit scenario. They got a lot of issues. Like people got problems all, throughout that whole Middle Eastern area right now, right? Monetary, physically. And so again, massive gap here. So I had to bring note of that because guess what? We're about halfway from the top of this gap to the bottom of the base right here. That's why it blew past this gap right here closure, right? That's why it blew past that gap closure, because ultimately we know that the market is completely overbought. I mean, let's just be honest, right? And if you look at this again, I'm always talking about what? Ocean waves, like just like you put in the back chat the over T, right? Sine waves, right? The market moves supposedly move sideways, right? Even though we had a lot of V-shaped moves over the past year where it was just kind of like up, down, up, down, up, down, left, right, you know, A, B, hit, press start, right? Country, right? Cheat codes and stuff. You have a massive top of the sine wave, right? A massive trough. I don't even know if you can count that there. I don't know what that is. But and then you have just massive push to the upside, right? Again, just gapping up, right? Pull back, close that. Oh, go ahead. You can say something.
Yeah. What is that bottom of the trough there? Is that I'm my thought is it's kind of a bear trap. So if I'm like I bought some VIX when it was, you know, when the market is getting pushed, right? You know, the monetary money, right, like you're saying, they're going to push it. So if they push it, you know, I'm buying my VIX when it hits low. And then today, I bought it yesterday. And then today it drove up and then they just sell at the end of the day. It seems like they're almost getting predictable, how they manipulate the market. I don't know. I mean, it seems like everybody's getting caught in this bear trap. Everybody's trying to run to security and everything else, which they can push the market up, and then boom, everybody sells and takes profit at the end of the day. So that's, I mean, basically, you get it in the morning, you get out in the afternoon.
Well, I mean, again, if you've been following the inflows, right? Here's how. If you've been watching the market, I would say at least, just to be honest, let's say second quarter going into the third fiscal quarter of 2019. Was when we really saw what was really happening in the market, while the market kept going up a lot in 2019. It was because the futures market was the cover. Where the dark pool buys were coming in, all the money was being made through the futures market. And so when retail opened up, you may have a little move here and there, but it was not the level of expansion that you was getting in the futures market, right? And so all those people who've been hiding out in the futures market, you know, benefiting off it, because again, if you've been watching future market, especially when the market fell on, let's say around February 20th, I mean, we're talking about expansive moves that you happen in the future market when retail opened up, and then it goes another, you know, 700-800 points in either direction. Sometimes in the same direction it was dropping in, you know, or going up in the futures market. And so a lot of this outflow that you got during throughout the session today, and this kind of overhang, you know, dump, so to speak, was just that. It was a lot of that, you know, pent up money that was kind of just, you know, I mean, overflowing at the scene, that people was making money through the futures contract. Again, obviously, you know, just buying XLK like crazy. Everybody's buying XLK like it's going out of style. Financial sector, forget about it. Straight garbage, right? XLF, no money being made there. We know why, because what? The Feds got them by a chokehold, right? They can't make money with low interest rate. That's how banks make money with. Overcharging people on interest rate just sat in the third. Mortgage-backed lending. It's can't even let go the stimulus money that was supposed to be for the American taxpayer. They're holding that hostage because they got hurt bad because of loans and default. That's what happened when you overinflate a bubble market and the cost of living or the rate of living doesn't increase at the level of you know, so-called quote unquote deflationary tactics that you're trying to obviously, you know, employ into the market to get people excited about all the supposed growth that we had, which we necessarily didn't have in organic growth. We had a whole lot of kind of market growth, but not organic growth, right? We had paper growth, but not in a tangible, in the bank account type of growth. Right? A lot of people made a lot of money on paper last year, right? And they would have had to sell their positions out, you know, to really realize that kind of reality. But a lot of people kept their money in the market because they saw 339 as just a beacon to get to 350, right? You know, the greedy trickle was like, oh, we're going to go to 350. We hit 340, we're going to 350. That's how they trade, right? And so a lot of them got caught with their pants down. A lot of them got caught with their pants down. I mean, from 339 all the way down to 217, right? We talking about billions and billions of dollars, trillions of dollars that was up there, perched up at 339, which was already at a bubble level, right? Because the market then wasn't naturally corrected, and all that stuff kind of got burnt up. So it ain't hard or far-fetched to see these people rolling what? And they own the squads. They're going to take care of their own. Again, y'all know how this stuff works. I ain't making this stuff up. Y'all know they was going to do everything they could to try to retrace some of that money back. And that's why we had a massive melt up from 217, 218 back on March 23rd. They didn't really even stop, to be honest. You know, you had a couple of days where it's like, oh, we're getting ready to roll back over, right? Got everybody excited, and they start buying puts. Guess what happened the next day? Gap up. Got him, right? Feds sitting around, you know, in boxer shorts in their little house, say, got him, hit that button over there, hit that button, like, got him. I mean, playing the market like it's a video game on our, on our dime and all this, that, third. So, gap up, gap fill here, starting to happen. Hold this gap right here, it's 283, and now that's going to be your next major level of what? Support. If they can't turn it here, right? Because what do you see right there? You see the pivot here. You see a pivot what? Right here, right? If they can't turn it here, even though the market's still overbought like a madman. That's why it's leaking hard out the house. Y'all said this thing leaking out the house? That ain't by accident, right? That is not by accident why it's leaking even more after hours, right? That's smart money, big money, what? Realizing some of those gains. That's people, fleeing a little bit, out of the XLK that was just, super pregnant, right? And so they're looking for the next opportunity when the market kind of bottom out so they can what? Ride the next trough. So again, like I said, fill some of these gaps, look at 280 for the next major pivot point, then we can have a conversation. If they can't turn it at 280, again, that is a major if though. Well, that's a major if. That's one old you got one of them old uncles that if was a if, we all be drunk. That's a major if right there, right? If they can't turn it there, seriously here, right? If they can't turn it at 280, what do you see next, right? What do you see on the charts here?
So here's my thought. If right now you got 284. So I'm thinking, so if they pump money in tomorrow morning because you can control that opening, then it'll just turn and it just bounce again, right? Or you don't think that's the possibility?
Not necessarily. It can bounce again, but let's look at this from the terms of where the market fell from today, right? And now if we do this on a smaller time frame, well, you do 5-minute time frame. Right. Let's see. Maybe I should do this on trading. Let me switch to trading. Right. Because again, now you have to be more. It's kind of like the risk now. Well, ordinarily it would seem like the risk is still to the upside, right? But the way the level of the insidious nature of the fund managers, the market makers. The banks that use this liquidity in the repo reverse operations, the Fed's outright buying ETFs outright, and we don't necessarily see any kind of massive. Matter of fact, let's run over there and see this real quick before I even say something. Let's go over here and check, the rest of the week's operations, right? I'm curious to see, and it's weird because I didn't even check it today. To be honest, I didn't check it today. Let's go check it. Right, let's go see what it's looking like over there, right? Because I got a feeling that hold on, this is the St. Louis one, right? So let's see, real quick, case study. All right, so hold up, okay. Hold on, let me refresh this thing. Wonder why it's looking all crazy. I need to go to the New York Feds, but we'll do today. All right, so today the St. Louis Feds pumped out around about 24.25 billion, right? Yesterday they pumped out about 20 billion. Now you see what's happening? They're increasing off the lows of roughly around about what? The 23rd, the 24th, right? It was just pretty much left for dead, right? You got 0.8 billion, basically down next to nothing at around 22nd up to the 24th, to the 30th, excuse me. At that point, the market was already kind of in idle mode by the banks. They had pretty much, squashed all the volatility. It was no need for them to kind of be pumping the market out of the St. Louis Fed. Now, let's run over here to the New York Fed, right? Y'all know they work in tandem, right? Those pretty much the monetary arms, the arms of the Treasury, fought the repo operation when they allocating those funds into the equity markets or mortgage-backed lending loans, Treasury loans, things of that nature, T-bills. That's where that money's been coming. It's been being allocated or distributed from those particular Federal Reserve hubs, right? The St. Louis Fed and the New York Fed. If you guys didn't know, you always keep an eye on those two right there when it comes to kind of fiscal money operations, right? We know Dallas Fed does their thing. We know the Philly Fed does their thing. The Atlanta Fed does their thing. But you watch that St. Louis and you watch that New York one, definitely. You definitely watch those two crooks. Yeah, I call all of them crooks, right? All right. Okay. So let's go to today. Now, this is today's operations. All right. Today is May 12th. Right? This goes into tomorrow's expiration date or maturity date of tomorrow. That's when it's supposed to close out. Right. Now, there's six pretty much tranches to drop today. So when you see that six participating counterparty, yeah, six tranches to drop today, right? To certain various, holders of this liquidity, right? Of these reverse repo operations, this money, this tranche money. What do you see right here? 0.825 billion. So what is that? That's banks around about what? That's not even a full billion.
Yeah,
that's about 800 million, 25 in the Treasury market today. So, and I'm saying that for a reason, right? Because if you go back and look at the previous days, well, those numbers were looking like what? 30 billion, 45 billion, 65 billion. So you have a massive what? Outflow today.
Oh, okay.
Outflow. This was already telegraphed. See, this stuff is done the day before, so all you gotta do is come over and see that the repo operation is going to be light today.
So it's not going to be necessarily, it's not going to be necessarily a balance. If you pump that much in, if they pump that much in, yeah, they were concerned about, trying to hold that position.
Were very light today. I mean, very light today in terms of at least the Treasury, the T-bills, right? You go look at the T-bill, we know that they have been pretty much stabilized to a degree. You get the 10-year rough around about 0.7 something around the 7%. The other day, it kind of rebounded up around the 6s and got back up near the 7s. And so they're watching that. That 10 years has been really funny lately. 30-year, you can go look at the Treasury Department, see where that's at. Now, going into the actual mortgage-backed lending loans, because that's what they're trying to save these junk bonds that's coming through the value of the back, the bad junk that's coming out of the back of these companies. They got major real estate liabilities, major inflated loan liability issues in terms of the interest rate. They're trying to save those right now, right? They're not even really concerned about the Treasury, because before, y'all keep in mind, remember they were very concerned about the Treasury market about a month ago. Y'all remember when the Treasury market was down like three something around there, and everybody was like I was really going to die, because y'all know if they ever let the Treasury market die, it's game over. I'm just going to put that out there. If they ever let the Treasury market die, it's game over. That's for everybody, not just everybody. So a major portion of that money was down in terms of the this tranche of operations came out of the point right here where the Treasury-backed agencies, mortgage-backed lending loan liabilities, things of that nature, at the tune of about 41 billion. Right, that was between yesterday afternoon until this morning. Right, so it closed this corporation out this morning around about 8:30 a.m. Now, I'm going somewhere with this. Now, let's go real quick. I'm gonna show you exactly what I'm talking about. I'm gonna show you how they operate, so y'all can follow this stuff yourself. Excuse me. Let me run over here to the SPY real quick. Right, keep on dumping SPY. See, we're going lower. We still going lower. 24.50. Right now, what do you see right here? Right. Let me see if I can do it this way. And maybe if I. Okay, yeah, maybe that's a little bit better. Yeah, a little bit. All right, so real quick, what do you see right here? let me back it out a little bit, just a little bit. The 11. No, I need to squeeze in. I should have just went over there with the trading view. All right, but I'll do it here. What do you see right here, guys? The market, what, 291, around about what, 5 o'clock this morning, right? Y'all, the market opens up at 4 a.m., right?
Mm-hmm.
What do you see right here? You see that line right there? That straight line is almost like a straight line of just buying. Who buys the market like this that time of morning? Some of y'all barely waking up at that time. Y'all stop kidding me.
Mm-hmm.
Y'all ain't got no job. Y'all ain't waking up like that.
Mm-hmm.
Ain't nobody buying the market like that.
Institutional.
That trunk, we saw that 41 billion. All that right there leaked into the market between 5 a.m. all the way up until rough around about what, 7, 8 o'clock. Couldn't make this stuff up. That trunk of 40-something billion. Repo operation. That operation closed at what time? We saw it on the thing I was showing y'all. It closed at what? 8:30, right? So whatever was left in there that they didn't pump out between 5 o'clock to 8 o'clock into 8:30 was this peanut. They dumped the majority of that cash early on. You see right what time to see the operation closed? 8:30 a.m. That was a tranche of what? $41 billion. They got sold into today. This how Wall Street get rich. Who y'all think got rich on that 41 billion right there?
Mm-hmm.
Day traders who were already buying the market at an all-time high when they came in when the market opened up and got caught in the nasty little chop channel, and then it sold up on the back of the day that were bullish until today. All they called got destroyed. They got destroyed. Couldn't make this stuff up. And then this little weak little $800 million, weak little, that's a lot of money, but I'm not to do some string with a piece chain with about 800 million right now. Give me my 8 million right now, 800 million. I can do something strange. They threw away $825 million today from the point when that last operation ended at 8:30. So basically from 9 o'clock, 9:30, up until the point where, again, go look at the chart on the S500 when it began to turn on the day's session. It was pretty much a clear indication that there was no more money left to pump the market, right? There was no more money to stop the inevitable bleeding that was going to come, because guess what we also saw? We saw the VIX sitting at what? The 200-day moving average, a clear pivot reversal indication that, hey, get short the market. Stuff up. Again, this ain't about the aspect that we just hindsight, but no, this is what we train for. This is what we're supposed to be looking for. And so I'm saying that to say because I ain't making this stuff up. So right here, 8 o'clock, 8:30, the rest of that trunk of money close out at 8:30. I mean, it's going to end at 8:30. It's supposed to close what? It's supposed to end all together at 8:30, right? It was obvious that they dumped all of that up into this move right here. It was obvious they dumped all of it into that move, right? Because the market up against a major level of what? Resistance to the 200-day moving average, which is roughly around what? That point we saw on when I put up the trading view around 294, right? 294, 295. Bulls didn't want no smoke today. It was obvious they didn't want no smoke today. And so guess what? 9 o'clock, 9:25, 9:30, what happened? The market did. Doof, right? That kind of sound. Doof, right? Now, chop sideways, roll on the price pretty much throughout the entire day. The criminal work there. Line it up all the way. The puts. Line it up all the way. The calls, right? Testing your resolve. Wanting to get you to what? Sell your position, right? But if you were that smart trader that saw those indications, you'll say what you did with the puts. You bought up around what? Right?
Right. Yeah, I'm on some more.
You bought more. Look at load the boat. Look at you going through digging the cow for loose change. You then borrow a couple dollars.
Mine chopped in half. I bought some more, and then I sold right at 345. Yeah, I mean it was crazy. But I don't. But I don't have your. I don't know what chart you're using. Because I don't know how you're getting numbers before open and close.
Like you puts calls. You mean like option buying or?
Well. Like you said in the Fed, that when you saw that money coming on this SPY,
mm-hmm.
is that your time? It was 6 o'clock. I'm looking at
your race roughly from 5 a.m. right up until, and it's weird too because my wife back it up. I was up late last night. Like I slept in my office last night. I got a little bed in my little office over. Y'all seen my little setup. And I'm grinding them late nights. I'm doing a lot of studying. Man,
Mm-hmm.
I ain't around by like 4 or something. And I had to look out and get them out to the daycare. So I was running on straight fumes. But I was sitting there watching that pivot because I saw the VIX at what? The 200-day moving average. So I'm like, I'm going to find these ones that overbought. I'm going to build me a little list. I'm going to go short them. And Chris, you can vouch for me. Y'all know a lot of these mornings I just kind of been absent in our little Facebook group. I ain't even posting in our Facebook group about late in the day. Because I was too busy trying to map out this market in terms of it being overbought, in terms of where we are in terms of the 200-day moving average in terms of VIX. And then that rip operation was small today. You go back and look at the ones 2 or 3 days ago, 4 days ago, the operations were like huge, right? They got thin. So this is what I'm talking about for the outflows, right? The outflows were starting to happen because they know it's up against a major level of resistance at that 200-day moving average to the VIX. I'm just giving it to the long side on SP 500. And for the VIX, it was the pivot point coming off that $90 block where it was, at its peak when the VIX was just surging and pulled back, right? And they just gutted the VIX, killed the volatility. Y'all been trading this market.
It's the VIX has been, the VIX has been. I was loving it earlier, but then as soon as they started pumping it,
so it wasn't hard to see what was going to happen. You had a massive bear flag. I mean, throughout the entire day, literally from 9:45, 9:50. All the way to 1 o'clock. Testing your resolve, testing your patience. How many people y'all think sold they puts around 10:50, 11 o'clock, 12 o'clock? And this market is going sideways. It ain't going nowhere, man. It's killing my theta. And they'll put the expire key mine to tomorrow too, because it was a 2-day expiration on once Monday close, you get a 2-day operation on the next potential expiring put buy. Or call back on the SPY, right? Unless you just bought, Friday expiration, but you got a chance to play an intraday, day trade with puts, right, or calls in the option market. So if you wasn't resilient to see what was happening here, and knowing how the market been trading, a lot of people are skittish, right? Because they're like, man, they're gonna turn this thing and send it higher, right? Spook them out of there, skittish, run them out of there. But you had to have seen where the VIX was, that this was a telltale signal to short this garbage market. Y'all know one of my usual suspects, and it had bad news today, right? Airplane. Y'all already know where I'm going, right?
Right. Yeah.
Where I'm going over, Chris. One of my favorite, my favorite culprits. I'm always trade. What the airplane company called? What they call them? Boeing, baby. I went with a Boeing and bake some biscuits today.
What we call it? We do the comparative methods.
Yeah.
Make sure that we look at the SPY, then look at Boeing and see it riding down too.
Yeah, like down here slalom riding in Jamaica, right? Like Jamaican right? And all y'all do, because y'all know we talking about a major Dow component, even though Boeing ain't been trading that way of late, because Apple didn't stole the show and a lot of a few others, but it's still a big Dow component bellwether in the overall sentiment value of the market, even though it's just been left for dead because it has many problems. But either way, you find those overpriced, frothy players, and you go strike them the hardest. And on top of that, they had bad news today. Couldn't make this stuff up. It's like they timing this stuff, son. They timed it. Right? And Boeing, again, case in point. Let's run right on over there because y'all know how this works. Now, Apple, I'm not even talking about Apple. Apple's so garbage. I'm so Apple. I got some Apple long term. Y'all know how this stuff go, but I'm gonna do this.
I was
I can keep
waiting for
100.
it. I was
Yeah,
waiting
man.
for it.
Oh man. And then Tesla, another one. You know, that's another conversation. Man,
Yeah.
look at this downtrend in Boeing today. Guys, y'all kidding me? Are y'all kidding me? Y'all know my little strategy, right? What's my little? Y'all know I got one real main strategy. My little, it's a little simple.
At 9:30.
No, what time? 9:50. 9:50.
9:50.
9:50 to 10 o'clock pullback. That reversal come like gangbusters every time. Seem to be. I'm like, I've been using that. Like we said, boy, well organized lie defeats a disorganized truth every time. Look here.
That's it.
Right.
Look right here. What do y'all see right here? Nah, it spiked up. You know, when it opened up, it went from like what 129 all the way up here to around about 132, 133, right?
Yeah.
Come 945, 950, right here 950, we're sitting at around about what 131, near 131, 132, right? So again, discipline. I still wait for that what 950, 10 o'clock range to hit. So instantly, I'm gonna show you how crazy it is. Look at that last patch of green right there. Again, you know, it ain't nothing major. Y'all know how I am. I got a simple little understanding, and I follow it because I've been studying the market. At 950, you see right here, see the last little bit of that green candle right there? Was roughly around about what? 945, somewhere around there. Then it turned what? Red. See that all that red right there? That's that indication of the reversal. 950 hits. Right. Lights out. Right? Lights out to the down.
Did you have a stop in there, or did you ride it all away, or what did you do? So you took a little bit.
I set the stop at the high. So that's what you do. You know, well, you know, it depends on how your money. You know, you can set it a little tighter, but ultimately, you say to yourself, if the barrage of selling start coming in, because guess what? I know you can't really see. Let me see if I can blow this thing up. Let's see if I can blow it up a little bit more. If you look down in the volume right here, when you see all the green right out the gate, right? Green, the market shot up. Then intricately you start seeing what? See the red? But I'm just saying that 950 reversal, when it was clear that it was getting ready to break this 132 support back to the downside, rough again around about 945, 950, it became even evident that it's going to be lights out, because what do you see right there? See that indicator right there? See that VWAP right there? VWAP literally almost at 949 on the dot. 949, 950 broke VWAP. So patiently, I'd have been like, oh man, God, I was not scared short hit 133, but that was just too what? That was too sketchy, right? That would have been sketchy, right? So I had to be patient. You had to be patient. It broke the VWAP, get short, right?
So you'll ride it up and then you'll put a put up there.
What do you mean, like out the gate when it rolled up?
Well, if you got a call on you get a call pre-market that's riding up, right? And then you buy your put at the top, or when you see it move so much, or how do you?
Even if you had a swing call in the Boeing yesterday, like say if you bought it in the other day, okay, just look at Boeing where it came from, right? Obviously, it trended ugly. It was ugly day yesterday too. It just basically went sideways throughout the entire day, right? You had some little moment where it kind of stretched out a little bit from 128. Went up and tested around about 138. But, necessarily really no true expansion in the entire intraday session. About $2, right? $2 and a little change. Ugly chop day for Boeing. Yeah, grinded up, options if you was day trading. So if you swung your puts, if you bought puts, obviously, because again, you're still talking about where the stock came from, right? You're still saying, okay, if it came from up here, 133, 134, and you broke that, going into yesterday, right? What you did, came back to the low of 128 off 133, 134. Well, again, the level of the gap where it gapped down roughly around about 131, one close about 132. That's a major point of resistance, right? That's coming from yesterday, right? I'm coming to today. When I see this peak right here, I go back over here. What do I see? that same level of resistance to a degree, even though it pierced above it ever so slightly, but y'all know the market, it has a way of trying to shake you out of it, right?
Mm.
So if you bought puts yesterday based on the gap down, you held them, right? Because you think, hey, let's say you bought the 127s or the 126s, right? Or the 125. Because theoretically, smart people, let's say, if you work with a little bit of money, they say you bought the the 125s, right? Or the 127s at the 134 level. That's pretty decent for Boeing. The way because Boeing moves kind of big swap. And sometimes Boeing puts calls out, right, could be a little bit more expensive on average sometimes, right? Depends on what in terms of especially got news coming out. So when the far fetched said at that point, you would have probably bought the, possibly let's say the 127s, the 128s, or the 125s, right? That's real money. And so boom, it chops out, goes sideways for the entire day yesterday, about $2 ATR range throughout the day. Really a whole lot of nothing. Gaps up, not necessarily gaps up, but runs up, when the bell opens up today. Again, massive shakeout by the market makers. Think they slick it in the can of oil on Sunday. But they ain't slick. All I had to do is go back and look at that VIX. Right? I'm looking at that VIX, right? I know all of the boots right now. Like, shaking their boots, clanging their boots today. Because all they need to see any major fund manager decide to say, I'm going to drain the swamp there because we at the point of resistance now. It's time to take profit in the XLK. It's time to take profit in some of the energy stocks that we've been riding high and some of these discretionary stocks. And it only takes a moment like that, and then it just it's like when you put a thread on a nice little shirt and that thing starts unraveling. That's basically what the market is, right?
Yeah, that's a good analogy.
And that's what happened. Look at the peak again. We going peak to trough. We talking about gap down from here to here, hit resistance ratio around about 132, comes up, opens up today, runs up to 133 and a little change, shake out in the kind of short trade, short sale sitting there from the other day. Try to shake them out of there. Especially if they got short, around that point there, around after market session the other day, or going into pre-market, excuse me, right? Especially if
like it's hot.
Exactly, dropping like it's hot. So guess what? Again, right at that point when it pivot, going back again, still going lower right now after that. Ooh, get it. I'll show my little position in a minute. I'll show you where I'm at. Right, but right here, again, it peaks up here. I'm not trying to time the top. You can't time the top, you can't time the bottom. Y'all know how this stuff works. Let's keep it 100. Right, you can't time the top, you can't time the bottom. You get lucky sometimes, but it's not an exact science. It's it's a aspect of leveling. Right, you have to learn how to put the market in the channel, find those supply zones, find those demand zones. Right, and anywhere within that demand zone or that supply zone, and that's when you particularly take your position. Your stop loss is going to be at the peak of that supply zone, and you taking that position is going to be anywhere in the middle or right at the base when it gets ready to fall. If you want to wait to see if it's really going to fall. You get short at that moment. Right there when it came down and tapped that the VWAP there, it got ready to break, was working about 131. Matter of fact, let me go to a bigger chart. I'm sitting there trying to squint and pinch. Ain't got no business doing that. I'm giving y'all low quality work over here. Forgive me, guys. Let me get to work. All right, let me go over here and go to work. All right, real quick. All right. Let's go to the Let's go right on over here. Let's go to the dusty little, right? Let's get at it, right? Let's go to the, let's do 5-minute chart. Let's keep it 100. So, right here, right? This that candle, this that money shot right there. Right here. That's the money shot, right? That's that money shot right here, right? This that fake out, right? This all fake out fugazi. See how it was gapping down, going into out of yesterday, and then today, the next, it gapped up off the lows yesterday on what?
Nothing.
Basically, optimism, hopium, right? All the true, I would say the true money already was starting to position itself to what? Get ready to get short the market, because case in point. We're looking at Boeing here. You see what? From this peak here, May 5th, all the way to this nasty little trough here, all the way back up to this point, obviously you cleared this old high here, right? Went up a little high here, pulled back into it. Again, that's to show you how strong this point of resistance was, because guess what? That's when it kind of got rejected to 200-day moving average back on the May 5th, right? Got rejected. kept kind of going above it, kept getting rejected, kept kind of going above it, kept getting rejected. So that became a instant what? Resistance point. What short sellers do what at major indicators like that? What do short sellers do when they see that kind of stuff right there? They get short, right? They see a failed attempt where you saw what? Couldn't breach it, couldn't breach it. Let me blow that up. I'm sorry. Let me blow that up. Let me blow this up here, right? Where we going? Mayfield, right? Couldn't breach above it, couldn't breach above it, couldn't close above it, couldn't close above it, couldn't close above it, right? And then what? Pulls back, right? Now this is the entire day of Mayfield coming out of May 4th when it gapped down, but we're just using that because y'all know that's a major indicator when you're trying to get back above what? A certain point when you had control the 200-day move narrative. If you lose that, that could be problematic. Here it tested it, right? It's not way far from it on this point here on the first, gap down, chopped sideways, tried to reclaim it, got rejected here. That's the first time it tried to test it again, got rejected. Instantly, you know, a person that was seeing it as a monetary moment, right? You get short there, and you what? You eat off that. You eat off that resistance. Now, if you already short up here, even though it breached it down here at the lows, now if you didn't cover your entire short position off at the major aspect of this dead cat bounce here, and you say, well, I'm still holding because I think it'll go lower, right? Well, guess what? Then that on the 7th, volume came in like gangbusters, as always, trying to save the market. Y'all know they're gonna try to save this market because y'all know this stuff, right?
The election. It's all about the election, right?
That's it, right? Because again, you're dealing with again different components of the market in terms of investor sentiment being driven by stocks like Apple, again, late Netflix even catching major bids up there, all-time highs. Boeing still a big bellwether when it comes to investor sentiment. You know, y'all know the usual suspects. But anyway, they use that as a moment to say, okay, you know, it's overdone, right? Let's get it up off the lows, right? Again, look down here in the RSI, oversold, right? Down here, what on the 5th, on the 6th was what trending down, then what oversold territory, right? Again, this ain't rocket science, right? Don't overstay your welcome if you don't have to. Get up out of there, right? Retreat, right? Now you got to retreat. And so you take that bag and you wait for the next time for it to what? Go up and test your level of what? Resistance that you came in at, rough around the 132 point. And, you know, again, it didn't make it the entire day on the 6th or the 7th. That's going into the 6th into the 7th. But, I mean, you had a nice little, you know, dip buy for anybody that caught it, you know, off the 121, right, which is a great buy, up and all the way up to like 130, right? They got about 10 points off there almost, right? Going into the 8th, it gaps up. Now you're back up above that what? That pivot point of resistance here. It became to be like a news point of scary where you're trying to what? Fill this gap here roughly around about 133, 134. You see this little chop zone here. That comes a point of resistance because you can see it just kind of went sideways in this ugly zone for a while. Hence, that's why it came right here and got what? Rejected. Because all this right here was what? Leftover money, stale money that had to get cleared. That money got cleared fast because it didn't last long too. Guess what? Tap, tap. I'm out of here. I'm out of here. I'm just got up out of there, right? And
margins, right?
Yeah, they retreated, right? They retreat, right? Them just retreat up out of there, then it just chopped sideways, and the income where we are today, right? So again, gaps down from here, 133, down here. We see what's going on here. Again, ugly though. It's ugly, but it's what it is. Now, I'm going to show y'all something. What do you see right here? If I could just do something. Let me see. What is that? What do y'all see right there?
Is that Monday? What is that? You're talking about the whole thing.
Right, on the 8th. Going back to the 7th into the 8th. But, you know, because y'all got to go back and look at the extended chart when you see certain patterns too, right? If it's about a week out, or near 2 weeks, whatever the case, you still want to see that extended aspect of what you're looking at in terms of an overall pattern, right? So what pattern is that right there? It's a broken kind of what? What do you see right here? It's broken, but what do you see right there?
That's not the cup and handle, is it? No. That's the
shoulder, head, shoulder,
Okay.
Broken, but that's why you gotta look at the longer time frames a little bit, right? To kind of give you that indication, because it don't have to be perfect. It just has to be, when you start to see what major levels of resistance. Now, even though this showed here is higher than this one, right? But it kind of cleared it, right here where it kind of hit that resistance. This right here was just an anomaly, right? Because today it was just trying to what? Shake short sellers off the trade, right? It was trying to shake those short sellers off the trade here with this spike up here. Same one we're talking about this AM. All it did was gave people an opportunity to buy what? They puts at a much more what? Cheaper price.
Yep.
That's all it did. You get excited when you see that, right? Oh, I can get these things a little cheaper.
20-30%. I'm like, that's a bargain. Yeah.
Thank you. See what I'm saying? Get that bag. So guess what? Head and shoulders revealed itself. Let's go. So again, you always typically do what? Head to neckline, right? So you talking about what? 133 hypothetically to around what? 128. So how much is that? About 4 or 5 points, right? So if we do that point there, so 130 to 128, right? Or roughly about 128. Where you at right here now? After hours. What? About what is it after hours? Like 120 what? 124?
Yeah, let me see. Yeah, 124. Yeah, 124. That's right.
Is that not that 4 to 5 point retracement from the neckline to the head in terms of the pullback? That's your 4 points.
Okay.
Right? Not rocket science. Just understanding how to look at the market. Again, you broke all the key major level indicators. VWAP, forget about it. Again, that's why I got short. See right here, right at 945, 950, right? You broke the VWAP, right? Roughly around this point right here, and this candle right here, this big bullish engulfing candle, bearish engulfing candle. Come on, thing. Let me get this out of here. Get that out of there. Okay, you broke it right here again, the VWAP here, right? And then after that, it was lights out. And this is a 5-minute candle, so it came within this 5-minute candle when you broke that VWAP for 950. After that, it was lights out. It was lights out, right? Didn't even put a much of struggle when it came back and retraced this entire what? Fake out move. So it was a fake out move, right? Chopped sideways and just what? Bled it throughout the entire. Clean. This is a short sale. Love to see this kind of move right here. You see that right there? Oh man. Oh. Yeah. You get.
So I guess I think I'm more lucky than precise.
No, but it's understanding how to turn your luck into what? A technical aspect. It don't have to always, because a lot of it is your luck is also a portion of intuition. Let's not get it twisted. We know a portion of luck is just is good intuition too. Being in the right place at the right time, that kind of reality, right? That part of luck, again, guys, being in the right place at the right time, you know what I'm saying? Orchestrated or not, she walks by, right? You gotta sometimes see your moment into fruition. You seeing this into fruition was just no different than what we always do as a trader. We're looking for what? Key indications, right? Overbought marketplace. VIX getting ready to hit a point of the 200 moving average. At that point, people hedge their position. The market's already pulled up over 30% off the lows in about a month and what? 20-something days.
Right.
It was a lot of telltale signs. You have to look at the broader picture. And it seems like a lot. You're like, man, that's a whole lot to think about. Well, if you want to be a proficient trader in this market, you leave no stone unturned. Why would you? It didn't cost you nothing, technically, because you just, let me go look at this chart one more time. Go do something with your family, come back. Let me look at this thing one more time. Let me go check the option market, see what the outflow is looking like for these contracts within these certain weeks. All right? Let me go see what the VIX looking like. Let me go see what this looking like. And that's how you do it. You just kind of piece it together. So sometimes it's like getting ready for a game, right? Football game or something. When it's game time, what do? You go out there and perform, right? So that's all it was for me. It was just seeing that's okay. Game time, right? We're breaking today. And all I really need to see is what? When we break this level, what? Right here. When we broke that point right there, right? That 128, right? When we broke 128, that's when I really got excited. Even I was excited seeing this right here. When we broke this 128, because what's that 128? Neckline, right? The neckline, right? Go back over here, right? You see a little, a little ugly little chop in this point here, but roughly around the same point, right? So, right around that point, around about that 128. Excuse me, come on. Yeah, around about 128, right? So again, I'm just seeing all that to say, I'm saying all that and seeing all this as, okay, this is opportunity. Let the market roll, right? And they had bad news today. They had more cancellations than planes today. A given, right? Some could say Boeing was the catalyst to kind of what broke the camel back today on this bad news. But everything else had to follow suit at that point, right? It's debatable, but at the end of the day, it bled easily to the downside. I mean, no resistance here. Not majorly, what you normally get out of Boeing, right? So stepping back, trying to test, moving averages, got rejected, go lower. Extended far from it here, right? And then you had this little last end of the day pump like they always try to do, right? Like they always try to do. Couldn't make this stuff up. 225, in come the what? The fake pump, right? In come the fake pump. Let's shake them out. Let's get them out of there, right? You like, man, I had to make all that money. They took me all the way back to 127 points and change. You like, that's about $300-400 if you got leverage, $1,000 plus if you got big money. Like, and then guess what? Sometimes you got to hold your resolve, right? Because the trend now is definitely to the what? To the downside, right? Until the market shows you different. Because guess what? Look right here. This right here, this fleeting move to the upside here on this little move right here. I mean, just ridiculous, right? So again, you got a small gap to fill around about what? 122.90, basically around 123, down back to that level support around about 121. If the Boeing gets back down to this 121, it can get real ugly because you see right here, what do you see right here? The double bottom, dead cat bounce right here. It got saved there, right? It got saved there, right? Go back a little bit. Last time it was down near that point was around about what? April the 2nd, right? And now it's coming, I mean, look at Boeing, right? From this perspective, right? Off the lows, it looks like it's what? It's bull flagging, right? But off the let me see here. Back this thing up. I'm sorry. I just got to show y'all this real quick. Again, I'm gonna get ready to get off here. If you go back to where it fell from, does that look like a bull flag or does that look like a bear flag? All right, look at the broader picture.
Yeah.
All right, look at the broader picture from here to down here. What pattern is that? That's a bear flag.
That's a bear flag for sure. What is that big dip? Is that March or is that the big one at the bottom? Or you go halfway? Don't go back a little. About right there. What is that? Is that each one of those? So to the right a little bit, right there. What is that? Is that March big dump?
March
what
9th.
day is that? March 9th, and then what's at the bottom of that? The bottom of the dip there. What date is that at the bottom of the dip there? Is that?
This was the I'm sorry. Can you see it? Let me blow it up a little bit. I should have just.
Yeah.
So
right
you're saying
right there? Yeah. What date is that there? What date? That's March 30th.
No, up here is March the 3rd.
March the 3rd. Okay.
This is March 3rd up here. Again, y'all know we kind of hit that bad news around about end of February the 23rd, 22nd, when the was going, y'all stuck in the highlight prisoners. Right? The markets began to kind of slowly, accept or didn't want to accept in the beginning. Then it began to actually say, well, we can just stop it. And then again, after that, it just fleeted to the downside. But obviously, Boeing came down and tested that $87 point, 88 some change, whatever. And again, since then, massive move though, from 88 all the way back up to like what, 180, right? Again, that's when the Feds came in with the bazooka. We talked about that. Ever since then, this thing barely couldn't even ever get back up to clear 150. Right? After it lost 150, I mean, it was a wrap because again, you see right here, pivot. You see it right here. barely piercing above it, kind of sticking back close to it here, right? Breaks down, comes back and tests it again right here. Got back above it ever so slightly here. Above 150 here, about 2 points. And guess what? After that, it's just goodbye. And now looking at Boeing here, again, look at this from this point here to here. If you draw, even if you even do this here, you do this point here, right? You do this little point right here.
Mm-hmm.
Oh, come on, thing. All right, you do that right there. And let's say just on GP. All right, we'll just do it on GP. Oh, come on. Oh, I forgot. You clone it. It's going to mess it up. Let me do it this way. All right, come off the lows. So where it's at now, right? Come off the low where it's at now, right? Look at that way it's there.
Mm.
Right? It look like it's more what? Top heavy than what? Bottom light. Right?
Mm-hmm.
Nothing comes in to save this here again. Nothing stagnant enough to come in and turn this here. This thing can easily float back down. The more if it tests that 121 we saw on that point there, or that resistance there, support to the downside, it can really get ugly. Right? And we talking about 2 or 3 points away from that just here in the after hour session.
Mm-hmm.
And it's just starting to turn around for a change. And it's just now with the SP 500 being rejected again at the 295, 294 resistance point on the 200-day moving average. That's just starting to happen again. And the laggards are always the ones that go what? That people go run the what? Hit the hardest.
Mm-hmm.
The ones who've been showing that they've been relatively weak. Now they're gonna go after the ones who've been strong too, because again they pregnant, but they also gonna find the ones who just been relatively weak, who typically moves a lot. And obviously stocks like Boeing, again, they got bad news still coming out about them. They're all over the place.
Mm-hmm.
But again, it's just something to think about. Again, I could be 100% wrong. I'm fine with that, right? But ultimately, again, I'm trading the sentiment. I'm trading the chart. I'm trading, the aspect of what I'm seeing in terms of weakness.
Mm-hmm.
Necessarily clearing on major hurdles. Everybody's been clearing major hurdles. I mean, look at Netflix, right? Look at company like Smile Direct. Smile Direct even came back banging, right? The business model again, homebound break orthodontic business. You ain't got to go and sit in a dentistry clinic. They send all your stuff to you at the house.
Mm-hmm.
Y'all start rebounding around about $4 or $5 and back up near 10. So I don't know what's after hours here, but it rebounded. Boeing can't get out of his own way. Right? Boeing cannot get out of his own way.
What do you think about Beyond Meat? I mean, they're way high now, but I mean, long term.
Well, just to be honest, I've been long Beyond Meat since like $45.
Okay.
In one of my long accounts. Now, I've been shorting it. I shorted it when it went parabolic. Now,
right.
Opportunity. I'm not when it got up to that again. It's like Tilray. Y'all remember my Tilray trade? Right? I still got the receipts over there posted on WeTrade HQ. I wrote that puppy all the way down. I wrote it up and I wrote that puppy all the way down. Gutted it. Tilray. And Tilray was about $7 today. $307. Sure. But Beyond Meat. So if you think about it from a use case, right? What does Beyond Meat have going for it that has it so attractive right now? Anybody? What does Beyond Meat have going for itself right now in relation to other aspects of the market?
Oh, well, they don't have, supposedly they don't have supply chain issues because you can produce it. So it's all green based. And China's got crazy demands. If the beef market is a problem, then you got, they're going to be the play temporarily, if nothing else, because you got to get protein. So
again, alternative food source. What's the problem we're having right now in America in terms of food? That's what's happening right now in America. Go ahead, shut down. Say again? I can hear you now. Go ahead.
Plant shut down.
What type of plants?
Tyson to be specific. So pork and beef. I think chicken as well.
Yep, chicken too. Yeah.
Right? They euthanizing what? Millions of chickens, pigs,
Right.
cows, milk getting thrown in the gutter right now. There's a major food shortage right now. Major. Yeah, unsafe work conditions. 100% right, Mr. Maroon Man. People catching coronavirus in some of these plants. Smithfield up there in New York, Pennsylvania. Right? Biggest pork producing manufacturing plant pretty much in America. Smithfield. Y'all know Smithfield. Every year y'all see that pork. I ain't talking about you. I am talking about, right? Getting them old Christmas ham, right? Old turkey ham, Thanksgiving ham, right? They major hit by the coronavirus, right? In terms of their workers, right? So they have to what? If that meat gets infected, you think the USDA, strict about basic stuff happening like salmonella and stuff like bacteria, and you got a coronavirus, you know they can't serve that stuff to the American people, right? That's a mad lawsuit coming, a major lawsuit coming. Right, so they had to dump a lot of that stuff, throw it away. So there's a meat shortage right now in America, a meat shortage. Believe it or not, I saw a post the other day. Was it today or yesterday? I think it was like about I want to say a 4 pound. Was it a 3 or 4 pound pack of ground chuck? Was like $20 and some change. $20 and some change. Again, for my meat eaters out there, no shade, but again, y'all better come over to the little plant side a little bit. Experiment a little bit. Time's already hard, right? But because of that, people are looking for what? Alternative what? Sources. Think about these packing plants and all that. They've been shut down too, right? So again, beyond meat, beyond reality, if you think about it in terms of the stock, but again, this was a no-brainer. Going into earnings, it was a no-brainer. I hate to even say it that way, but it was. But it was. The lows around here, around about that, $57, all that kind of stuff like that, craziness, back in April. I mean, y'all know they ate that up. When it came down there 50, came down there 58, they start eating it up. Because the first thing people start thinking about during the lockdown is that, guess what? Once we go through all the groceries, it's kind of like when y'all watching apocalyptic movies, right? And zombie movies, right? When all the zombies are ran everybody out of town and all the food is left in the grocery store, right? If you don't get it before it go bad, or when you that stock, if you can't replenish it, it lights out. Y'all think they were buying out toilet paper like crazy. A lot of the stuff that we don't typically take for granted, like your butcher, right? The charcuterie places and your dairy farm, all the people. I don't eat that stuff, but y'all know what I'm saying. They have an important role in our day-to-day lifestyle in terms of our decadent culture, right? Have this ease of access to have that kind of level of agricultural system, farming and agriculture basically in the day. But long story short, again, the use case for Beyond Meat began to build because of the fact that it's easy to what? Manufacture. And you can grow more peas than you can grow more what? Cows. You can grow more chickens. The upkeep for what? For chickens, cows, and pigs in relation to what? Some peas that's grown in the field. Seriously? Right? Low overhead. Cattle business is expensive. I mean, keep it clear. The cattle business is very expensive. And American markets, had a lot of competition coming from what? South America.
South America, yeah.
They have one of the most extravagant, livestock businesses on the planet. Good for the soil down there, all that. I don't know if they're treating cattle, that level of, humanity, but they got good land down there. So again, Brazil, you think about a place like Brazil, man, stop. Loaded. Here's how I know. Y'all done been to the Brazilian steakhouses before, stop playing around. Back when I was a real big meat eater, right? You're a meat eater, right? Like what Malcolm X said, what are you? You're a gut eater. You eat guts all day. You're a gut eater, right? So Brazilian steakhouses, come on. You see what I'm saying? I mean, there's a high turnover ratio for the level of, and even to my meat, just the amount of beef that we consume as humans. I'm saying, obviously, especially in America, but long story short, right? Short story long, right? This short story turned into a long one, right? Because you didn't have to think about it in the, long to realize that this is going to be a great use case, right? Plant-based burgers. If I go to the grocery store and everybody panic and buy all the meat, right? And then at some point the farmers can't re-butcher, butcher, not re-butcher, but butcher new cattle and get them back in the shelves and store in the supermarket. Well, what's your next best alternative? What's that stuff over there in that package over there that look like meat? It's expensive, but all the other stuff gone.
So the demand.
Exactly.
So when you're looking at how much meat left on the bone, how much possible demand, say if we go through a bunch of bankruptcies with the farmers,
they can't
produce it, right? So if they can't produce it, how much meat on a bone is left? Can this go to 300?
Okay, so think about it from a place where it was going before all this stuff happened.
Okay.
Look at the chart, right? Parabolic, right? Remember when that happened, right? Open up IPO around about 45, right?
Mm-hmm.
Pull back a little bit, took off, right? From May, I remember like yesterday, right? Again, because I've been talking about Beyond Meat for like about 2 years before even IPO.
Mm-hmm.
I kept telling her, hey, Beyond Meat. When this stock go live, y'all better get y'all some of this one, right? Because you're talking about a disruptor. That's like Tesla being disrupted to the what? The oil industry, right? They hate Elon with a passion. Well, cattle and dairy farmers and people like that, they don't want to deal with what? They don't want to see Beyond Meat.
Mm-hmm.
Right? They're like, get this guy out of here. Right? He came in, destroyed the market. Right? Became the new Tesla of the food world. Parabolic moves are always made to be what? Sold into. All it did was backfill that entire move. Look right here. It backfilled almost that entire move. Now, this was the coronavirus, obviously, but even at this point here, going back to November, right, when it kind of hit that trough and went kind of sideways in this ugly little chop zone support point here, that right there, all you need to see. Remember, it barely could break below $72, right? $70 was like the line in the sand, but $72, it stayed in the zone around about 72, around about, I would say around about 80 something, 83, 84 to like $70 a share for almost an entire, let's see, November all the way around the route, but January, about 2 or 3 months. It would not break out of that, off that support, right? That's all a person that's really bullish on the stock needed to see. And they were just, at that point, they were just doing what? Waiting for some news to come out, some bullish news to come out to turn the sentiment. Bulls would not let this thing drop. Institutional traders would not let this thing drop. I used to be frustrated because I was trying to short up in some of these channels at that time. I was frustrated like a mother, like, man, they won't let this thing drop below 71, 72. Man, these jokers stingy, right? And then lo and behold,
I think I did short them at one time, and I think my short was pretty good. But I was just long term. I'm thinking, this has a potential if we got all this disruption. So that's what I was looking for.
Yeah, if you're trying to short in at that point, you're just trying to short the channel from top, peak to trough. But then it broke out, right? It broke out and went from what? 74 up and tested that what? That 133 point again. And 130 there, resistance out around that point, and then guess what? Here come Rona, right? Forget about it, right? Nobody's spared, right? Forget about it. Now, broke from 130, right? Broke that 128, 128 support. Flush like it, what we knew it was going to do, all the way almost down to near the what? IPO price. $3 away from the IPO price. Now, again, going back to that point, y'all know they weren't going to let this thing, go any further because now you got a lot of institutional traders in this trade at this point. Right? So I'm saying big money into it now because they see what? They saw that there, and then they start what? Licking their lips and rubbing their hands together. Y'all like that little meme with that guy in that little yellow coat. I don't even know what that's from, but every time I see, I get to laughing. Joke with that, with the licking their lips, rubbing their hands together, high around a tree like even they go steal somebody's wife or something. Right? That joker. That's institutional traders. They just saw that there and say, oh, I ain't missing this, on the back end. And so what did Beyond Meat do while everybody was still lagging? Not only did it get out of the get back the gains that it lost, it broke the resistance and went higher. It's sitting above its pre-coronavirus dump. 126, 128, Now you're sitting up here around about 136. You know, it was up here around about what 144, right? But you know it pulled back today, obviously. You know, for what reason it needed to, right? Because the S&P 500 pulled back, but the market pulled back today.
So what's the channel look like right now? What do you think?
Look at my linear regression band. You see my purple and my red linear regression band right here? The big,
okay.
Big, where's your midpoint? 131.
131.
Right? 131, 132. Right? Where we sitting at right now? But 136. Tomorrow, if the market stays in the trend that it's in right now on the sell-off, it can easily come out and test what? At least the 20-day moving average. Easily. Or it can trade like Zoom, right? Antithetical to the what? The overall trend of the overall market. It being a hedge for what? The S&P 500, it goes opposite direction. It didn't happen today because it was just overbought. Let's grant it. I mean, let's not kid ourselves. Look at the chart down here on the RSI. Look at the 1 hour chart, RSI.
Right, yeah.
Overbought.
Yeah.
Right, even today, it was overbought before it pulled back some finally. Right, and it just kept marching higher. So if you draw the trend, again, it ain't hard to see what's going on there. Right, so, but again, if you're looking at this for as scalp play, I'm looking at 131. If it breaks that, okay, I can get a little excited. I know it's probably going to come down to 118 unless something really keeps the market in a nasty flux to the downside, which it could happen because y'all been hearing like I've been hearing. People like Paul Tudor Jones, Jeffrey Gunlock, people like Chamath Palihapitiya, a few others like that. The market, everybody know the market's kind of overbought. They know it. It ain't no secret. And so fund managers are starting to what? Take a little bit of that product table, right? Leave some of the retail traders stuck. Now, that don't necessarily mean they can't still turn the market. I keep saying it because you can't fight the Feds. It's hard to tell the direction from a fundamental aspect because you can't read when they just gonna wake up tomorrow and feel like again, Powell, can have a bad day at the house with the wife, and he get nasty, even though the repo rates are slowing down because they got to kind of recount for some of that distribution inflows and collect some of that money back. He can say, well, no, tomorrow, man, this, I don't like how things going, man. We're gonna add a little, and then they stay there, well, it kill everybody. Disrespectfully supposed to be traded to the downside because the trend is your friend. So in this market, it's hard to even say the trend is your friend. Because they so criminal with it, and I hate to say that word, but I'm being honest. They so criminal with it. I mean, they just don't care. It's in your face now that the level of manipulation, they just don't care. Because they feel like the ideal that people feel like if they can make a little money and their little 401k or pensions overrides the fact that they in a very unprecedented moment in history where you have literally the Feds have taken the free markets away from the free market and trying to play Jesus or God or whatever your deity that people may follow. They're actually trying to play a deity in the market. That is 100% called fascism. That is 100% fascism. When your government takes over your free will market apparatuses like something like this, that's 100% fascism. Because who really benefits off all this taxpayers' money coming into the market right now? You, me, or Wall Street. And I say you and me, even though we traded, we ain't trading at the level of the flows that they put.
We're not.
Let's be honest.
Definitely.
I always tell people, your little puny dollars do not turn the market. I'm sorry, don't get excited.
That's right.
Your little $3 or even your little $200,000 little leverage account trade there, it still ain't enough. But these jokers got millions and millions of dollars. You know what I'm saying? At their disposal. So again, you have to be, realistic, in your approach to understand that. All right. Right. When it's time to be sanguine about the market, you be sanguine. When it's time to be phlegmatic about the market, you be phlegmatic. In moments like this, you start to see it kind of roll a little bit because it was overbought and it hit some key level of resistance in terms of S&P 500. Those stocks who have just kind of been really just banging up against the upside, free will, whatever, it's time for them to go, meet some of this smoke. Now, if you go to the hourly time frame, again, we know that the S&P 500 is above 200, right? Now, and it's trying to what? It's trying to snap back to it, right? You know what I'm talking about, that 280? That 280 level of support, 280 level to the downside, right? Now you go to that, again, longer time frame, right? You go to the daily chart, right? What is it looking like? On the daily chart, that's what most big fund managers, they look at the daily charts, right? Right? 200-day moving average up here, 294. right? And the next major level of support is down here roughly around, about, again, that 281, 282, right? We break that, it can get ugly if we break it, right? If it was the fifth. But, you know, again, this is what we're watching, right? We're watching it for that perspective. So right now, you got an ugly little bearish engulfing candle on the daily here. Depends how the market opens up tonight, you know, in the futures market, then going into tomorrow. This can get, you know, we might get another consecutive day of bleeding, which is rare because we rarely begin 2 days worth of selling in this kind of market. If you don't believe me, go look. Look, even right here, in this moment here, you don't even call that selling because it closed here, spinning top, and it just, I don't know what this is. Then the next day, it gapped up and went higher. So all that red, but it went up. You couldn't make this stuff up, bro. These people were maniacal with it. You know what I'm saying? You got two clear little sell days here, obviously. You know what I'm saying? It's just a channel what? Channel rotation. This is textbook. Look how they played this right here. They went long, they went short. They did what? They went long, and now they're doing what? Going short. Couldn't make this stuff up. Couldn't make this stuff up. That's your outflows and your inflows, right? Your distribution channel. Your supply zone for now and your demand zone for now. Pseudo as it may be, excuse me, but that's what the market is trading in at this point. Right? It's clear, right? It's a clear indication, and it's getting tight. They can try to trend, like I said, they're trying to hope they can keep it in that channel, trend it all the way out to everybody good, so-called quote unquote get back to work. Then that could be the bullets or the use case to say what? Oh, everybody's back to work. You know, the economy, you know, all that talking point. Y'all know it's a bunch of fluff. Are we back? No, you're not back. You got over 30 million people unemployed. Even if they go back to work tomorrow, them 30 million is not going back. You talking about maybe 2% up, 3% of them, somewhere around there. Okay, if we want to be liberal, we'll give them 7%. Y'all ain't gonna tell me all 30 million people to go back to work. Come to 15, ain't happening.
Not enough Uber drivers.
Right.
Yeah, I mean that's what they consider good paying jobs now. So you gotta, yeah. I mean, you know, his bounce back is okay. Everybody's bouncing back to service jobs, not to professional. So yeah, it's just yeah.
So again, this ain't nothing that we don't or we can't put in perspective, right? We trade. A lot of what we do as traders and investors is, you know, again, it's innate, our innate ability to be able to kind of also look at the dynamics of what they call the buyer and the seller when we look at our charts and see the greens and the reds before you even put the indicators up there, right? Because sometimes you got to learn how to trade without indicators. I know it's like driving without no lights on at night. I get it. But you need to learn the road that you take more often than none, right? What I mean by that, if you get used to these different, assets, how they trade, the level of volume, the level of the ATR, the ultimate sentiment, some of these tickets over others. I mean, some of these stocks all got their own little personality, right? Y'all know how this stuff works. And you get all the stuff that confuses you out of the way sometimes, like the indicator, just look at the chart. Again, we know the market's typically supposed to move in sideways, supposed to. On the Trump, straight V's, boy. Y'all know he ain't no secret. He loved the VJs, right? Did he come out and say what, grabbing the crap, something like that? So Trump loved the V's. Now he ain't no stranger to the V's. Now look here. When you ever see the market do something like that? V shapes. That's unheard of. Look at it, V's. All 2019 with number of V's. Now let me show you how wicked that is. Go back before that, before he came into office, right? Or even when he first came in. Look at that right there. You don't see all that. You don't see all that foolishness, right? Going back here, you don't see all that foolishness. Not like that. I mean, you got some V's that happen, but it wasn't like this here, right? Again, this is V's, and then it went nowhere. From here to here, it went nowhere. When it happened back here, when you see moments like that, at least it kind of what? It kept inclining. It kept inclining. Right? It kept inclining on those moments. Again, this point here, wicked, just sideways. Whole lot of chop action. Again, from 2018, beginning of 2018, basically until we broke 20 into 2019. Again, just the market just went nowhere. So it's crazy. I mean, we live for volatility, we live for expansion, we live for those things, but Again, use your naked eye. Use your naked eye sometimes to help you out. You know, and you see what? You see an overarching pattern here. You're starting to see that kind of, you know, arching, you know, aspect in here. You're starting to see it. You see what I'm saying? You're starting to see it here. Now, whether it comes down or not and come down in this trend line or not, that's to be determined, right? That's to be determined. But you're starting to see it, what? Pin up against support here. I'm just giving resistance at the 200 moving average, and it's showing fatigue. It's overbought, obviously, extreme off the lows, and you got a lot of economic headwind data starting to come into fruition in terms of what people start to look at now. As spook, I call it spook signals, right? Spook signals, spooking you up out of there. You know, so again, just whatever. Again, these are just my opinions, obviously. But whether you agree, you don't have to agree. But I'm looking at a lot of the price action based on you know what people are starting to do in terms of again certain pivot points in the market, how they react when those things happen. And apparently here, you know, and here when it broke in it out of it, you know, and then back into it, it got excited. That's why you got a little bullish, little green candle here when it got low and got back in it. Oh, we got excited. Gap up, went high, tested resistance, got rejected. Came down, came back, test again. Guess what they did? Got excited again. Look at that bullish and green candle there. And go for candle there. It got excited, pushed it back up high again. Right here. Now, these days, see when it's sold out, you said it was kind of blocky, right? Barely, like I said, barely selling out, greedy, stingy with the bear. Didn't want to get the bears, no money. Stingy, I want to call them something else, but y'all know how I don't use that kind of language. Stingy little BSTS, TRDS, y'all know what I'm talking about, right? And then here, guess what? We finally got a chance to eat today. And I say we, meaning people who obviously see the market at a point where you just know it's extended, whether you bullish and long or not, he's like, oh, okay, it's time to take a break. Right? Give up a little bit. So bears got a chance to eat today. Massive meal, you know, served today at the bear trough. Right? Again, no problem from this guy. Sorry, over Chris. Y'all know how I get talking, man. Forget that, you know. Come let you back in. My bad. Right?
Yeah, all right.
Yeah, I need to have my split screen. I keep not doing it. I need to start doing it, but yeah, y'all see what it is. You know, again, I'm just
take a look at Twilio for me. Take a look at Twilio. TWLO.
Yeah, let me get over here. Hold up. Where's my okay, yeah, let me. It's like just that quick, I almost lost my. Okay, yeah, so Twilio. All right, so yeah, we know Twilio is one of those ones who define gravity right now. It's extended itself off the lows in terms of the coronavirus, and it became a use case play based on what? It's tech, right? What does Twilio do? And what do they have that makes them a better mousetrap inside the coronavirus situation? Anybody? Anybody know the fundamental story on Twilio?
Twilio, right.
Because obviously y'all look at the chart like, man, I think this, what coronavirus, right? Seriously, like what coronavirus?
Well, it's cloud network based, so you know everybody's trying to do cloud.
Right. So again, just like Zoom, right? Those banned the burglar bandits, right? That's basically what they are, burglary bandits, right? Stealing all the kind of the clout right now. They're feasting off of it right now. Feasting off this idea that people need storage and work capacity from home and sensitive all that. These they beasting. Case in point, another one today. This just Twilio today, obviously, well, not today, but again, over the time period since it broke out, excuse me, right? Because I'm on the daily chart. But again, still trending up in the, above the VWAP, so it's still in the bullish stance. Again, look at the VWAP there, right? Close above it. Mm-hmm. Another play like that, and I'm saying that only because them ones you brought up, but I played this in the earnings, right? I played this one in the earnings last night. Datadog, right? Look at Datadog. One of them same plays right there. Twilio, Datadog. Datadog a lot cheaper, obviously. Look where it came from. $28 a share. Where's it at right now? $68 a share. They had earnings last night. See the gap up? Massive. Cloud storage. Right? Young stock too. Young stock just came what IPO last year.
Jeez, I missed that one. I didn't hear about that.
Yeah, I traded a few times. When out there, when it IPO, right? Again, and it's just not breaking out of this right here, from here to down here. It's just not what breaking out. At 125 shares in the earning at $55.71, somewhere around there in the earnings. Only 125 shares, but that's all I needed. That was a nice little bag. From 55
and they're 20 billion market cap, so they're not small. Yeah, that's good.
Yeah. And it's still fairly, price relative to some of its major players, again, like a Splunk or, them type, Salesforce and, Twilio and Adobe and what's some of the others? It's a few more, y'all know, to all the little cloud plays like that. Again, and it's just not taking off, just not going to Mars, so to speak. All right. So again, that was a nice little play.
Yeah, that was a nice one. Yeah.
Yeah, hit a little pay dirt on it, and just been riding the wave, right? Just been riding the wave.
That's it.
Yeah, I took most of the profit out of it because I am.
There you go.
Now, what I did do, I sold 100. True story, and I kept 25. Right, I did 25 because again, I'm in at 55.71. Right now, chances are, again, we break 70. Again, it can get a little messy. Right, it can get a little messy. I can accept that, and that's a low carrying cost because on 25 shares, I'm not paying boatload. Right, before the swing, for the swing trade. So again, little moments like that, you're like, okay, I can work with that. Right, I can do a little some strain for a little piece of change. Right, so in fact, where my little Datadog share is still at, I think I got like what 200 left in it. Yep, about $288, right? Let me see. That little trade. But yeah, that trade was about 16, around $1,600. And I took that 100 off and left the 25, left that 25 still in it. Right, so that's where my that's my little position right there. All right. 25 shares still in it. Sold 100. You see my average is 55.71. Right. So again, I ain't know 25 shares, that thing still up 280, but pull back a little bit at the hour, which is obviously the market say, hey, I'm out of here. The spike fleeted on me a little bit, which is good. But yeah, so that's where it's at after hours opposite. But still holding on pretty strong relative to its move that it made throughout the day. Now Tesla, yeah, okay, Tesla.
Good Tesla did today.
Man, Tesla went gangbusters today off that little Elon Musk trying to defy the law. Right? You out there trying to try the law today.
California, yeah.
Yeah, last night. You gonna not listen to the county board talking about keeping their plant closed. I just over that thing ran on up and said, y'all want to take me out of jail, take me to jail. And so y'all know the type of traders that trade Tesla, Coke fans anyway. And so
that's right.
Coke fans said, you telling me, Elon? Who cares if you breaking the law? You telling me, Elon? Them type. But if you break the law, you should go to jail. How dare you? How dare you defy the law? Right? They so fake. Right? They so fake. Y'all know what it is, though. Right? Again, they just, worshipers. Right? But either way, the stock had a bang up day to the upside off that defiant move by him. Stock obviously closed around about 811 yesterday. Pulled down as low about 804. Right? It bounced. And then again, my news started circulating yesterday after hours. What he was trying to do, buyers came in, methodically, in the after hour session, late in the after hour session too, to a degree. And then a little bit into, as you can see, it pierced up here, 1840, went sideways, and then it kind of incrementally closed up around about 11, 812, 813, somewhere around 8, somewhere around there. Right? And then it opened up today, around 816, somewhere around there, and just went ham. Right? It went ham, so to speak. Right, and so went all the way up here, roughly around about 844. So I added more short, up around about 840ish, and again, back in the day was just, golden. Again, based on the SP 500, Tesla came all the way back and gave all them gains back. Gave all those gains back. Right? And a little extra. Came down and hit like 795, pierced underneath that $800 level of support. So, again, you're seeing that Boeing, right? Tesla, right? I'm pretty sure if I put up Apple, some of those, you'll see the same kind of, well, Apple just, again, oh, man, shucks. I don't even want to talk about Apple. Apple's so illegally traded right now, just ridiculous. I mean, everybody. Now, this right here was the story of the day, though. This was the story today. Did y'all see this one here? Grubhub. Did y'all see the story on Grubhub today?
Yeah.
Oh, yeah.
Uber and Grubhub. Uber.
Shout out to
trying to buy them, yeah.
Y'all remember I was talking about Grubhub a while back when I was saying they left for dead at this point, let somebody buy them out because they can't compete with DoorDash. Y'all remember I've forgotten about it. Maybe about a month ago, maybe so. Right? And lo and behold, another fledgling hurt company that has a, eater delivery business in terms of Uber Eats, try to make a power move, right? They're trying to reinvent themselves right now. It's necessary that they try to do something because of the fact that if we can move towards a more, socially distant society where you can have food deliveries at, pretty much all-time highs because restaurant businesses are going to be struck hard by sit-there, diners, with typically people like, waitresses, they just pretty much lost all their little jobs, right? Because there's no use case for them, right? You gotta wait for tables. But I mean, this is the point how invention is born out of necessity. So people running towards what? Delivery service businesses, right? And so Uber tried to make a power play on that. So initially they came out and said they wanted to buy Grubhub. Grubhub didn't necessarily agree to it. It just said what? Like anybody, they'll entertain the conversation. And the stock did what?
Yeah.
Gangbusters. Gangbusters. Again, kind of left it there like most of these will start $45, jumped up from 45, went all the way up here in there 65. Almost 20 points. Expansive move. Right?
Yeah, I was trying to find a put there when it was at 64, and I was like, well, if they close the deal, then it's like a YOLO. You just if you get it, you get it. If you don't, then you don't. But I didn't get a chance. I couldn't find a good one.
I tried the short. I use the word tried. I tried short up around that point there. Yeah, because initial first spike is always that shock and awe, and then the pullback. And I thought, clearing at least, that point of 60, coming from 45, I said, man, I think I got to pull back. Man, I tried to short there.
Right.
Speed up 668, 678, 680, 61, 61. I thought, oh man, what are these jokers doing? Ran him up out of there. All right. Took about $300-400 from me. I said, God dog it. I said, okay. I can't fight it. Because I already know these jokers like a mad dog right now. Mad dog. But they ain't gonna let you touch it right now. And soon, I was just
you got rid of it.
Yeah, it was a little too early. Because guess what? On the way, when it went hit like 64, up near that point there, and it pulled back. It came all the way back down to around about 55, almost 10 points on that downtrend. I was just a little too soon because I tried to get short up around that point right there, up around that 11 o'clock area, and it wasn't done yet. And when I went to like 64, pull back. I mean, if I was just waiting,
So you don't like to go past that 10-ish mark, or do you what do you like?
What do you mean?
Like at that Grubhub, I guess I'm more of a swing than a day, so I'll look at it. Now, if it moves in a day, I'll get rid of it. But I'm usually looking for a big move like that one at trail at the end of the day. I would have definitely got rid of that at the end of the day. When it started trailing that much, I mean, you didn't need a chart to see that. That is just crazy. When it started right around 3 o'clock, 3:05 on Grubhub, when it started to lose it, yeah. So it was, if I had...
That's when it became relevant. Yeah, I just was too soon to the party. Typically, that's not even within my wheelhouse to go that early. But sometimes I do know we have that kind of spike to keep out. It went from like 47, all the way above like 50, 57.
Right.
So that's like 2 points, And it wasn't like, they agreed. It's just that they said there was in the talks and the work. I read, the little, the little article. So we're like, they agree, but I said, okay, well, 10 points, okay, that's a little extreme. Okay, but hey, your girl would be dead anyway, so people excited. I said, I'll tell you what, I said, let me see if it breaches 60, I'll do a little bit over 60. Right? So I got short around about 60, 08, somewhere around there. And the attitude around about what, 60, 23-ish, somewhere around there. And I think what speed up, 645, 668, 670, 650, 690. I was like, oh man, here they go. They finna try to run it. And so as soon as I got near like 60, 60, 94, 5, somewhere right there, I said, no, I'm just gonna get out. I'm gonna wait. I'm not gonna force it. Yeah, I was just a little too soon because literally on that next trend back over to the downside, it broke and came all the way down and hit like, again, the point when it hit them lows around about 55. Now,
what are your stops around? You like to have your stops around? What do you go 20? I mean, it depends on what you're looking at.
Yeah, it depends on the shares I get because I never go all in out the gate. You should always scale in, methodically, like you're supposed to. And so initially, I came in with 250, right? At 607, somewhere around 608, whatever I got in, I first came in. And then I went, I added the next tranche, which was my bigger tranche, right? Because I said, it's all going to top out around about 630-ish, maybe 640, 650, right? I was looking at that 50-cent cash market at that point. This is what we do. We typically short on what? Half a whole dollar marks, right? So 608 was a little too premature. It spiked up around 620. So that's okay. Let me try to get, short here. I think it's going to kind of, trend out around about 630, 60-30, somewhere around there, 60-40 maybe. So I got short around about 60-23 the other trunk. It was like about 500 some chairs at that point. And shucks, bro. It just went to squeezing. I said, you know what? Okay. So that brought my average up around, rough around about 60, 18-ish, somewhere around there. And it got about 668, 60, pulled back 650, 670. I said, okay, it's wavering here. It might show that, and then that thing just skyrockets. I'm out. Right? But if it's that kind of running like that, it's hard to kind of set a stop unless you just want to do like a top point, right?
Okay.
In this case, I would have said 61, but I mean, I'm talking about 618 to $61 with 750 shares, right? You're talking about 750 shares, basically, roughly around about what roughly around about near 80-something cents. You do the math on that. That ain't too pretty, right? So as you can see, I said I lost about $300-400. There you go. Right? So 61 was going to be my line in the sand, but ultimately, if I could have got out anywhere around 68, if it really because the way it was moving so fast, I could have had a little small loss, thinking it was going to turn, and it didn't, but it turned around and came back, other way on the back end, and got it. So, but well, I missed it, I should say, but that's a part of me trying to.
Yeah, that's absolutely. You're never 100%, right?
Right, but you're right though. The smart trader, after you saw it made that high, and it made that high and pull back, and it marched methodically back up to try to test again, up near this point here. Pull back again, came up and tried to test again, near 65, right? Again, it showed you what it was doing throughout at that point. So 65 became easily the line in the sand, right? A little bit under $65. It easily became the line in the sand. Once it was established on the back end of the day, like you said, that's when it became like new money. Because again, at that point, all the rush hour traders, day traders that were in here, it's like, oh, I'm exiting, right? I'm exiting out of here, bro. It was fun, right? Thanks for the ride,
Thanks for the ride,
Yeah, and that's what that would have been the more constructive trade. What would have been to take it on the back end and just say, let me just eat the back end of this, just move out of the bushes, right? So
but you never know if it went high. I mean, it could have, it's something, because that's a news play more than a, I guess, it could. You get one huge news story, and next thing you know, it's
a much needed one too, because again, look what Grubhub was left for dead, right? Grubhub was left for dead in that aspect of that. So, again, I'm just fortunate because again, I could have got real wrecked in that stock. Had it just really came a little bit more heavier, but I made it forward in my Royal Caribbean trade, and then also again. My Tesla, again, I hit Tesla, Yeah, I know I'm always going to keep my foot on Tesla neck. And it's
right.
I mean, I showed that one like a surgeon. I mean, I got showed on Tesla like a surgeon. I mean, literally around my 841, 841 and some change, 842. I hit that, man. So you look, I saw that weakness up there. Matter of fact, hold up, where my Tesla position right now, and I held it too because I was like, man, look, because I am not afraid to give it back in this perspective. Because I'm always trying to assert my, my premise on those stuff like that, because y'all know once they start to fall or they rise based in the customer direction, they go in the other direction. But once they start to make that descent, they can unravel a lot faster, right? And some of these stocks that they slowly, they'll give a little inch, give up a little bit. So I was like, you know what, hey, yeah, if I'm gonna play around a little bit, I'm gonna stretch this little count out in the after hour session. I got a little bit of bond in the other one. Y'all know I trade like about 2 of these little trading net ones. I said I'm gonna push this joker here. I'm gonna push it. I'm gonna push him because Elon he tried to play Hollywood Co. Right? He tried to play Hollywood Co. out there. So I thought it was gonna be just all a spectacle. All right, so my Tesla short, as you can see here, I'm short at what? 81.50. On 80 shares. It's expensive now. It's expensive.
Right.
I'm stressing this little count out. This one's pretty good, but anyway. So again, it was like 80. It was like 87. So 7, whatever. But anyway, again, as you can see here, that point right here, right around that 81, 842, peak around 842.35, 83. I was skimming 843. I got short. I get a little bit under around about 841.70ish, and add it to a little bit, make it around about 88 shares. 87 shares, excuse me. And again, as you can see, the average ended up around about 81.50, and the rest is just, pretty much just riding slalom to that point, to the downside. When it broke the VWAP, I really started to smile because I said, you know what, this is what I needed. Because again, the way the Tesla trade, it can get real ugly. It can get real ugly. Again, in the pattern, I see what? I see that there. I see the head here, and I see what? Showed over here. This on the daily.
Yep.
This on the daily. And again, it had to unfold. But once it started to unfold, that's what you see. If you're still in the trade, you still got to wait, let it reveal itself. Some patterns reveal themselves late on the intraday session, and that's what it did, because here was a clear indication. Got to the VWAP, it got rejected. Rarely do Tesla gets rejected at the VWAP, and don't pitch through it just to kind of shake short side. It has a nasty habit when it hit those key indications like that, it'll just blow through it just to kind of shake, try to shake you out of it, right? Get out of there. But it didn't this time. It actually respected it twice. It tapped it there and it tapped it here, and didn't penetrate. I said, oh, all right. I said, okay. And then after that, again, it just rolled out. So based on 2 o'clock, it just downtrended. It kind of hit that little moment where it just gave up. It got, a lot of it just pumping dump throughout the day anyway, because from what happened yesterday, there was no really true, fundamental money in Tesla for today. It was just idea that he defied the law. People thought they used it as an excuse, so to speak. But that was that. So, and now again, you right back there, $800. So if it breaks 800 and gets back to the 700, I'm a party.
Where you say you got in at over?
841. Can you see my screen right here?
Oh yeah. I'm looking at it. Oh, okay.
I'm at 841.50 on the dot.
Oh yeah, that's a Tesla move right there.
Yeah, you know what I'm saying?
Quick fast drop.
Yeah. See what I'm saying?
Yeah.
So 7 kept 80. Nice little bag so far. Again, I'm looking for that $800 breach. All I need to see it kind of breach below 811, right? Because that was yesterday's closing price, which should have been opened up below that today. It stayed below that, but again, they used that excuse to run it up today with him defying the law, which it had no fundamental reason to do that. I mean, it was we know what's happening there. They're in trouble. Their production numbers are going to be in trouble. So he's trying to do everything to kind of excite, the shareholders like he's trying. All right, no, you ain't gonna start this one this time. You got to wait for the last 3 earnings on a whole lot of whatever. Again, I'm longer term positions on where, but right now, no. I'm gonna eat some of this. I'm gonna eat some of this hype. right? I'm gonna eat some of all this, illusion of grandeur, and I'm just waiting for it to break 800. It breaks 800. Well, again, we know off this mad move here, again, it's kind of filling this gap here. Basically, all it did after it kind of rolled up and did this foolishness, this gap here, rough around 800. It breaks that. We know that the bottom peak, bottom point before it pivoted, before at last point it took off from earnings around about 782, 780, somewhere around 780. Right. So I'm looking for a test of that before the week is over with. If we keep this garbage here from doing what it's trying to do right now after hours, right, and we keep this mess suppressed here, right, we can definitely get the Tesla back down to the 780, break that 780 support to the downside potentially. And then it can really get ugly. Right? And it can really get ugly at that point, because if it opens up tomorrow below 800, let's say around about 796, 7-ish, 75 would be more ideal. If it opens around about 795 and does its typical, when the market opens up, kind of spike up to the upside, test that resistance, maybe 800, 802. On the way back down after that 9:50, 10 o'clock scenario, if it's pivoting, reversing, if it does that kind of rally, I'm definitely going to add to that position again, right, and ride it back down a little bit lower. Yeah. Right now, the future market is open up after 6 o'clock, and you see exactly what's happening in the SP 500. Here come the criminals. Remember I told y'all all the money been made in the futures market. They've been stealing all the money in the futures market. If you follow the market, you follow the futures, that's where all the money being made. Retailers have no clue, right? This is where they've been getting it at. Right. This is where they've been getting it.
What tools are you using for that? Are you going to what sites do you?
Oh, when you go to investing.com on the easiest one. Go right on over to investing, and matter of fact, let's run over there real quick. Again, free. It's free, obviously too. I mean, you can do it on your TD Ameritrade. You can definitely do it on TD Ameritrade. ES underscore F. For the future, and just see it through there too. TD Ameritrade. But again, if you want to get a little bit more, the bells and the whistles aspect of it, you just go right on to investing.com. Matter of fact, let me see here. Come on, then. So investing.com.
Right, I see the currencies.
Let's go to indices. And go to
indices. Indices. Okay, there we go.
Mm-hmm. And then it's real time too, so it ain't ain't no lag. It's real time too, which I love about it. You can check the commodities, ETLs, crypto. You can change it around, put forex in there too. You can change it around however you want, or tailor it to your liking. But again, I come over and trying to watch the oil market, because the oil market definitely is one that everybody watching, right? So breaking the crude oil.
I've been staying away from oil right now. I just can't.
It's crazy. Oil crazy right now. Oil breaking hard.
You think it's no? I mean, it was good on the way down, but I just hadn't picked the bottom yet. I was going to jump in earlier, but it was down at like 17 or something.
Yeah, it'll break your heart and put it back together and break it again. So it's one of the type plays.
Yeah,
you got to be very strategic in your directions in it, because of the fact that what it's dealing with. Again, everybody needs this thing to get off the low. It got off the low around what, $10, right?
Right.
Given point only because the fact that he kept making it such a major headline. Everybody kept talking about it. So all that kind of news came to it, brought what they call optimistic investors into it, and they got it off the lows. It wasn't like the Saudis were doing anything magical to kind of change the outflow in terms of production, because they already kind of set their mandate what they're going to do with the Russians based on that last debacle. And they said we're only going to cut 10 million barrels per oil, right, per day. And they needed, and Wall Street was saying we need at least 15, minimum of 15, right? They wanted 20 something, but they only got 10. And so that didn't sound good for Wall Street. And so Wall Street did what to the futures contract in the oil market and the coal meds? They sold them all, right? Yeah. And then they kept getting beat up too for the for the past 2 or 3 days after that scenario had happened. Y'all go back to that date, and then remember downtrend, then when I was down like 10, and then people really came in and started buying that junk up. And so again, kudos to them, because again, you're right back at 25 now. And it's been
I was sitting on the side watching. I was sitting on the side watching, and I was waiting for a stronger. Yeah, that's where my chart reading is a little bit week because I should have. That's the one I kicked myself on because I think I had some of calls in. They were really. I mean, when they were negative, when they were selling those negative, when oil got to that point, those negative contracts.
Yeah.
I mean that was that was the time to get in, and I kept looking at it, and then next thing you know, went to 17, and now looking at 25. So it's
Again, it's crazy because when you think about these things in terms of it's just like, man, how could this even happen? Again, we went from all the way down like 655 at the low, and kind of got back up to that $10 point, kind of held there to 30. I mean, couldn't make this stuff up. I mean, you look at here at the technical chart here on investing.com. Again, y'all know the CLMO, all right, crude oil futures basically. You want to try to see what's going on here, and you see. Hold up, let me go to a longer. Okay, yeah, let's do the 1 month. Again, just crazy how the market just kind of gave up. Coming from a place where, again, you talking about oil futures contract, again, back in 2008, I mean, you talking about over $120 a barrel, somewhere over $100 a barrel. Again, you can see the movement over the time, right? So I remember having a conversation with one of our guys from the We Trade HQ, right? The guys haven't, obviously I know my mentor at We Trade HQ, haven't signed up to the site, definitely go sign up. It's free. It's a really good site. Yeah, give credit where it's due. Brad and Jacob, they built it out and it's getting better and better. It's a free site, where you can use screen stock to do all that kind of stuff, right? Especially if you, let's say if you want to buy a subscription to TradingView, right? Well, HQ, give it to you basically for free. Now, you can't get every single feature that you've used to buy, but you basically get it for free, right? And don't have to deal with all that kind of stuff, if you ain't paid and little pop-up stuff, right? It's baked into it. But long story short, I remember having a conversation with a guy at that point. All right, so you know what? It's like, it's going back, it's going back over near $100 a barrel and all this stuff. I was like, no, I doubt it. Because again, that market is being disrupted. I mean, solar power is coming on fast. Electrical power is coming on fast. I mean, before you start, talking about Elon, that whole ideal of that technology is starting to become a very, necessity, right? From your legislations and things of that nature too. So it's not so much as just being a private sector reality. It's more of a public concern, right? With ICE vehicles and y'all know carbon foot pollution. Long story short, we know the oil market was already downtrending based off the 2008 crash, right? We know. I'm just saying this because of historical context. We'll never see oil back up to these prices like this ever again. All
right. So here's one question. Here's one question. Okay. Go ahead and finish.
Go ahead.
I was gonna say. So what one catalyst would be like we go to war with Iran or something. So that would be my okay, you grab oil at 100 and buy the options on that. It'll be really cheap. But that's just in case, if something bumps, something happens on the weekend, somebody lobs something, a missile or something, and you got a war going on. So that would make oil prices change, right?
Right. That'd be the only thing to say the oil market. And then it still won't be at the point where, again, we're talking about back here. Right?
Okay.
If you go back to, again, 9/11 happened way back here. It really didn't really affect us in the pumps until rough around about what? Well, the war didn't really start happening until around, 2002, 2003, around that point, it really became to be relevant. But you see how it gradually increased here? It wasn't just like, okay, fight tomorrow, what I'm saying? Guns, bubble gun, everything, throwing rocks, that. It was gradually, right? It kind of took off like how Bitcoin did. Think about it. Bitcoin was 2017. Summer 2017, Bitcoin around about $1,100, 17, $1,500. Then it hit 2,000 around about June. After that, it's like that, kind of went up, pulled back, and then it all up 20,000. Or thing seemed like back in 2003, 2004, up until 2008 when they had the market crash. And guess what? It was a long overdue. It was overbought. It was greedy. People like Halliburton, Schlumberger, Exxon, Marathon Petroleum out in the west coast of Africa, all these big oil conglomerates feasted off of taxpayers' dismay. They made a killing on making your life miserable at the pump. And there was no need to. But keep in mind, because when they somewhat, quote unquote, somewhat stabilized the Middle East to the point where America did what they wanted to in terms of being able to control what? The oil in the ground in Saudi Arabia at that point, when it was obvious at that point, when they overthrew Saddam, that they were there for that reason only, right? And for the rebuilding of that infrastructure through all the other little, operations that they had on the books, right? So again, at that point, I mean, it wasn't nothing because they say, well, how are they gonna pay for the war? Well, Saudi's gonna pay for it through what? Through the oil, right? That's what they used as a carrot, right? More than that, but y'all know it. Long story short, anyway, it dumped under the market crash, right? Respectfully so, right? Why is it dumping into market crashing when it has to do with housing? What housing got to do with you driving your car, right? It was just overbought. It was an excuse for them to sell off the oil market, right? Okay, so you had a small snapback. Anything that drops that fast, that wicked, because that's what it is, a fast, wicked drop. You're going to have some kind of snapback. It didn't retrace the entire move, right? But it came back at least about near 67%, near 70%. Did it not? Right? Looking at the chart right here.
Yeah.
Now, I'm going to show y'all something here. Right? I'm going to show y'all something here. Right? And that's when it was obviously it entered into a what? A bear market. Anytime a stock, anything drops more than what? 30-40%.
Yeah.
It into what they call into a particular what aspect of it, what they consider to be a bear market, right? Now, again, do this real quick here. Because there's always a moment when you got to have some, a moment to look at the markets and say, well, okay, well, why is it, why does this look like this, right? I'm seeing this on the same reality over here. Coronavirus, housing market subprime lending loan, coronavirus. What that song over Chris? That little song that rapper was singing the other day. What the little rapper? Is it the Nicki? Not Nicki Minaj. What's the other one?
You talking about Cardi B?
Cardi B. What that little song she got out with the coronavirus?
Yeah.
I go.
Coronavirus. Coronavirus. It's getting real. It's getting real.
That coronavirus got real, and it did what?
Yeah.
It saw up here the same way you saw back in the oil market, right? Almost kind of same kind of level of the way the market sleep, and then you had a retrace around about what? Up here around about what? And then 60% off the low. Well, in this case 30%, but it looked like it retraced almost what? And then 60% of the move though, at least 67% of the move, right? But we already entered into a bear market around this point right here, right? Apparently, right? So there are also what they call bull markets and bear markets, bull runs and bear markets. Excuse me, right? We've heard that before. We understand what that means when you have a bull run within inside of a bear market. So all the talking points like Jim Cramer, Mike Santelli, not Mike Santelli, not Santelli, but what's the other guy's name over there? I forgot. All the major bullish traders. Right, yeah. Never doing anything wrong because they just so greedy, right? And they always look at you as anti-American. You want to bet against the market, which is the dumbest thing.
Bill Ackman too.
Well, Bill Ackman actually, he was the biggest bear. He made the most money on the drop, and then he still called. He woke up and had an epiphany, right? As if he was kind of betting against America. Then he so-called supposedly went long, right? Yeah, like he timed perfect. Yeah, we knew what was up with that too. But you're right, over Chris. But that's it. You had a kind of a fleeting move, and then a retracement. The only people that were still short the market at this point were people like Ray Dalio, Paul Tudor Jones, Jeffrey Gunlap, people like that. They were still saying short the market because it was just overbought anyway, right? Even down here, they're like, man, stay short, right? Because this bubble was waiting to burst. They know what was up, but again, you can't fight the Fed, or if you can, you got to have more. Again, y'all know how to say
deep pockets.
Or we say in the trading world, investment world, is what? The market can remain irrational, right? Longer than you can remain what? Solid with S.
Solvent.
There you go. Y'all know that saying like a Bible verse, right?
That is my favorite quote. Yes, that's true.
And true story. The market can remain irrational longer than you can remain solvent, right? So that means don't fight what you can't defend, right? If you can't, don't have a point. Don't be Hollywood Cole, right? Don't do it. So, but again, I'm just showing y'all this for a reason, because the market snapped back and ran back over there 30% off the low. And so you would say, man, the market back ain't nothing like your coronavirus. What coronavirus, right? But that's how they get you, because when you get complacent, all these people right here in this chop zone here, they got what? They're complacent, right? Today was what? A flash signal that said, hold up, what's this about? We're not used to that kind of candle. We're not used to that kind of pullback, because complacency sets in when you're dealing with an artificial marketplace, right? Where it has no real true price, evolvement or discovery on its own, right? Because we know we're dealing with these certain times where they're trying to use it as a cover to hold the market hostage, right? They're saying they're doing it only because of the fact that this happened out of thin air. Well, that's not an excuse to hold markets hostage. Things have to balance themselves out. In nature, you can't go throwing up, I don't know, some old green hornet, green shield when a big hurricane comes. That's nature. You can't stop. Again, they're trying to play God. Y'all know what it is. But either way, the market still retraced, and it's starting to show levels of weakness at the resistance. If they can't find a way to push this new sentiment of traders back into the market to get it back above the 290, basically the 295 resistance point to the upside, above the 200-day moving average, it could easily roll back over, right? And people are betting against it right now for that same reason, because they know it went too fast, went too far too fast off the lows, and it was all what? Fed money. That ain't, again, retail. Yeah, and this when they start killing all the volume, definitely around this point. Again, I'm just showing you all that for this reason. For this reason only. Going back to the oil market. Yeah, I don't want to lose my train of thought. But let's put some context to it, right? Let's put some respect on oil market, right? You ain't respect that you need to be had, basically, but I'm trying to give it a little credit. So guess what you have right here? Massive sell-off in the oil market, and then what happened? A bull run.
Mm-hmm.
Bull run. From 2009 all the way up to what, 2011, about 2 years. Well, you know that SP 500 ain't gonna take that long to do what it's gonna do, but we just use it in the context where we're at. It hit this point here, right? It's that overarching little point right there. Matter of fact, all right. Let me let's do a little magenta line, right? And roll it back over, right?
Mm-hmm.
Roll it back over, right? So what do you have right here?
Oh yeah, that's like a head and shoulders kind of.
What you see what's happening here in terms of if we talk about anything in the oil market,
Definitely
getting anywhere, right? Yeah, getting anywhere back to a point of profitability. Now, case study. Some of you guys may or may not know, how much does a barrel of oil has to be in order for a company to be profitable in this industry? Anybody, go.
I think it's like $10 or something. It's 10. How much? I don't think it's $10 or something like that.
Yeah. Oh, you guess out there if you had to. How much does one barrel of oil has to be, crude oil has to be, in order for a company to be somewhat near profitable, or at least come close to breaking even? Anybody? One 55 gallon drum barrel of oil has to be what?
$40.
All right. Over Chris says 40. What about you, brother Phil? Don't throw gas out there.
$10, I think, is all profit, pretty much.
You saying 10? All right. Anybody in the back chat? Anybody want to throw out a number? Over T. Anybody? Over Brandon, if y'all still hanging around. Over David, anybody in the back chat? Brother Matthew, anybody want to throw a number around? Anybody want to throw a number out there? Anybody want to throw a number? 45, Mr. Maroon Man. Anybody want to throw a number out there? Over Chris says 40. Over Phil Schema says for 10. Anybody? Over T says 55. All right, 55. Can I get one more answer in the back chat? One more answer in the bit chat. The back chat. Come on, anybody? $30, Mr. Maroon Man said $30. So to Brother T. All right. Now Brother Matthews came in late. 45. So you got a tie between Brother T and Brother Matthews. One barrel of oil has to be at least $50 a barrel.
50, okay.
At least $50 a barrel. You talking about, you know, all the expenses, all this stuff. So, you know, you think about roughly, you know, it's 55 gallons, you know, in a one drum barrel. You know, at $50, you can do the math on that in terms of conversion, right? You know, in terms of, you know, the price of the barrel, all this stuff too. So you have to be near $50 a barrel. Now, I'm going to show you something, which is crazy in terms of being right? That's when you can make money, right? At $50 a barrel, you can make some money, right? Broke above it here, went skyrocket. Pitched below it here, they came in and tried to buy it about the low, obviously because that was stagnant because of the whatever. But the main volume came in at that what $50 level again. See right here, the big bullish engulfing candle right here. If I see a candle right there, look at that candle right there. That candle opened up around about $50, right around $50 point. They got happy because guess what? Yeah. That's where the money magic is. Now you can make money down below that, but this one you really become more profitable when you get above $50 a barrel. Y'all remember how the market trended around about $50 a barrel for a good part? Matter of fact, I'll show you what I'm talking about. Don't talk about it, right? Be about it. Right here. Look at this point right here. Y'all see all the chop zone right here? This little chop zone right here. All right. Let me see if I can draw a line there. All right. And let's do another one. Right. Obviously, you know, it failed obviously because of egregious reasons for whatever reason at this point. But within this little so-called channel, it was hovering around there. What? $50, right? Kept going, hitting it here, right? Go above it. Here's some resistance here. Pull back. Came down 46. Came back above $50. Got back above it. Keep in mind, this is like 2017, right? Right, during Trump's new reign. Right, and so it kind of stayed within that point of trying to get above 50, right? So when it got around like $75 a barrel, what was Trump saying at that point? This was back on around about October of September of 2018. If y'all remember this stuff like I do, I pay attention to the news. What was Trump saying back then around that point when it was around about $70 a barrel? If anybody can remember what he was saying in terms of his talking points. Was he bullish on oil or was he bearish?
He was definitely, I thought he was bullish. I thought he was always kind of an oil fan because of jobs, yeah.
Make fun of Chris. You think Trump was bullish on oil at $75 a barrel or bearish?
I'm not going to lie. I don't know what he was in 2018.
18. All right, anybody in the back check? All right. Barrel loans. Yep. Brother JPJ says what, $20, right? I'm going to make your mind. I forgot that. All right, so anybody? All right. So he was actually bearish on oil at that point. Because what Trump made the talking points in 2017? Cheaper gas prices and what? Better so-called taxes. Even though we know taxes weren't better for us, it was only better for rich people like it always is. But he was bearish on oil above over $55 a barrel. He said the sweet spot for oil around about $55 a barrel. That was Trump's talking point the whole time. When it gets that high, that what? Them gas prices when they go back up. Who wants to pay high gas prices at a point where they ain't no war, right? Remember his whole campaign was about what? Ending the war, what? Getting everybody out of Iraq.
Right. That's right.
Money, right? Unwanted taxpayer money and oil prices staying up. As long as we stay over there, that's mechanized, you know, armies and all that stuff that costs money. So that costs the price of oil bill just because you over there occupying people, you know. I need oil around about $55 a barrel. And when you start saying that, what did oil do? Look right here. It went from $75 a barrel all the way back down to what? $43. You know, it fleeted all the way down there and then got back in that zone, rough around about what? $64 is what? $50 a barrel, and it chopped out sideways around about what? $55 a barrel. See right here? Couldn't make this stuff up.
Now, at that same time, he was still concerned about the dollar being so strong too. Is it so? If the oil is lower, the dollar is a little bit weaker. Is that?
He was fighting the dollar being too high. He was fighting oil prices being above $55 a barrel, and he was dealing with what? Tariffs, right? Trade war, right? So, based upon his economics or his little economic team, they need the oil around 55. They need the dollar to be roughly anywhere around 95 to 90, right? Well, we know the dollar at now. It's still banging up near 100 almost, right? If they got the dollar under 90, there really would have been, you know, in their mind, right? Because at that point, you know, they can so-called, get the rates down a little lower, right? Get people to kind of fall into that value, you know, they can still kept the rates at a certain point, but the Fed began to raise rate. It messed up, his whole little game plan, right? And for the tax incentives, for the Republican base, right? And so, and the dollar's kind of stayed strong within that, in that aspect, right? Because typically, if you're going to cut rates like that, your dollar obviously has to come down a little bit too, right?
Yeah.
To kind of match that level of, interest rate for banks can make money everybody else, right? But you got a dollar that's still banging up to the upside, still high, and you still cut rates. That's the recipe for disaster, right? That's how you end up having yield inversions and all that kind of stuff, because again, the dollar ain't really, getting a whole lot in a low interest rate environment when, I'm just saying at this point, because of the coronavirus situation, when you don't have the level of demand of people spending enough to kind of really recirculate it. Well, I mean, at the level that they print it, because you got a repo operations going to, you got low rates and all that kind of stuff as well, and you still got an expensive dollar, right? That's kind of, odd. That's why the price of meat going up right now. Not only because it's shorter, but that's a carrying cost, right? And it's a carrying cost to pay for a gallon of milk at the point. You still got a strong dollar. That dollar needs to come down a little bit, man, so we can get a little bit more bang for our buck, basically, right? It ain't just a incentive to have low interest rates alone. A lot of people ain't dealing with credit, because that's the only people really affects people that's in the credit market, right? People that work hard for their money, that's not dealing with that. Their dollar ain't really stretching a whole lot. Right? Because again, it's high. I mean, whatever. I mean, I'm no macroeconomist and all that, but I piece my way through a lot of stuff but I'm still studying and learning a lot about it in the treasury market. How the treasury department actually works, all this, that, and the third, but. And same way with oil, right? You don't need oil. Again, around about $55 a barrel, you're paying roughly about $2.50 to $3 a gallon, right? Somewhere around there, $2.20, $2.50, I say about $2.50 to $3 a gallon. Right? To them, that's a sweet spot, because they feel like if we learn how to start paying $4 or $5 a gallon at some point. Some people paying $7 or $8, $6 when it was really bad, right?
Right? California.
You like, man, you had to give up some real hobbies just to even put gas in the car. Like, man, I can't, tricking out this week. Put gas in the car.
Right.
It was that bad. And so again, that's the reality of how these kind of level of the economics of how it's important to follow all these kind of key industries. Again, the oil market. Again, you got boats that got to get powered, planes that got to get powered through gas, fossil fuels. Stuff expensive, right? So again, the price of fuel went up. Guess what our American Airlines and Delta did? They started doing what? Raising the price on your seats, on your baggage, and all that stuff. They start gouging. That's how they make their money, right? And carrying costs. You got to pay that loss. So tariff and trade war kicked in, and companies had to pay that taxation, and they want to pass that cost on to the consumer, right? Again, you have to try to find ways to pad it and bake it into the book some kind of way. And it costs. But again, just long story short, but that's what you have here. I mean, you still got it in a, if you look at it, I mean, it's ugly because it's broken, right? It's broken, right? Even here at this point, it could have held and trended even down at this point here, around about $4 a barrel. It still would have somewhat been in a bullet stance coming off where it came from, back in the 90s and 2000. But it broke all logic. It defied all logic and went, the $6 a barrel. Couldn't make this stuff up. So the only thing you got now to go off of is what? Past performance. So when you draw this overarching little bend right here, where does it end up at right there? Y'all see that point right there? It ends up roughly around about what? $50 a barrel.
$50 a barrel, yeah.
If they can get it back up to $50 a barrel, man, they're gonna scream hallelujah, thank y'all, that all your little favorite deity, they're gonna scream Allah, all them. They're gonna call everybody. Right?
But you gotta get everybody back to work though. I mean, there's no cars on the road, so you're not gonna,
factories, planes, trains, boats, use case up against a disruptive business in solar power, wind, and electric that is picking up steam even more during these times, because you have to find alternative uses, right? In terms of exactly, because all that barrel that was sitting out off the coast of California in the Pacific, when y'all saw that picture like I did, it's like some of the old school board game called Battleship. Who sunk my battleship?
Yeah,
full of oil and couldn't even dock. couldn't even dock. Right? It's like them having to kill all those chickens and all those cows and all that stuff because, again, you had no use case for it. You know, so just to think people just gonna rush back to no. So this is when you have cataclysmic events like something like a coronavirus or 2008 subprime lending crash that happened, markets just don't snap back like they trying to tell y'all it's gonna happen. That's what they keep telling y'all, right? It's gonna snap back, recovery, or at least gonna be oh no.
Any person with sense know it ain't gonna snap back like that.
Exactly. Look at here. 2008, 2009, you had a miniature run, obviously off the lows, obviously, but it fell over time. 2008, pretty much all 2008. Well, from basically from June, 6 months all the way down to February of 2009, so roughly about 7-8 months of just selling off in the oil market, and it took 2009 all the way up to 2011, right? Around about the spring of 2011, right? Beginning of 2009, about 2 years to get even all the way back to about 114. So again, after that, it just broke again 105 down to 45. Again, big chunks there. Again, over time, when people have these long leap contracts, that's what you do when you're doing the oil market. You buy leap contracts. You buy them leaps because they're cheaper, typically in this industry, but you're doing it on the auspices of where you think the market's at and where it's going to go. In this case, again, you had all-time lows down there, going back as far as basically, like never, right? Since this oil ticker been, crude, index been traded, in terms of hitting $6 and some change, when it flashed that low back on that day on the 3rd of, on the 2nd of March, it was just crazy, unheard of. And so it's now fighting for dear life. You look at this one little green candle, it's like it's fighting for dear life. It's fighting for dear life. Let's be honest, look at it compared to all that carnage, right? All this carnage and what it did here. And so again, the one has to clear the top of that wick. It has to get back up $26. And then it has to clear this wick right here, right? All that kind of shakeout. It has to clear 29, right? In order for this thing to really, assert itself. If not, it's going to chop sideways, slightly bullish, possibly then pull all the way back. And again, it can just downtrend and go, it could get ugly. It still can't get ugly for me, even though the economy about to open back up. But we'll see. And because again, the Saudis still have to be complicit. This has a lot of different components to it besides, okay, people going back to work. Because guess who also got to be complicit in this? The Saudis and the Russians. Right? They have to be willing to want to, do some more production cuts, right? Or at this point when everybody go back and see what the number look like in terms of people, fuel consumption, whether or not they need to do more, expansion, excuse me, at that point, if there's a demand there. Right? But, again, it's going to take some time because of the fact. So again, like I said, if they can get it back to $50 a barrel, man, throw you some confetti out there. Will it last and break above it? I don't know, right? I'm skeptical. Because again, you see this overarching, band there hey, that's saying, hey, good luck. Like, even if you go up, now you can make some money on the way back up there again.
Now that's what I was just thinking. Look, if you buy some calls and just kind of sit on them.
Yeah, buy you some leaps out. Get you about a few month contracts out. Maybe around
January.
Yep, I said January 2021. Yep. You definitely need to kind of go out a little bit, right? See some of those contracts out at that point, because again, at least then, because y'all know how the oil market moves. You see it here. Look at it took months, to do this. Right? It took a couple years to do that. Right. So this right here, you're on the back of a cataclysmic, drop. You think about it, it's going to take at least a minimum 6 to 8 months to kind of find its footing itself up out of here if it's going to regain itself. Right. So you got to buy your contracts extended out that much unless you're going to pay a premium for anything in the close range. Right. You're going to pay for it. But, again, hopefully they ain't too bad because if it dumps on you, that's going to be painful. Because you buy them too close and they're going to cost you a little extra penny. It's supposed to buy them a little cheaper and a little, further baying out. Depends on which ones you get, in terms of extension.
But the premiums go crazy, man. So.
Yeah. You know what I'm saying? But it's all in, it's all a part of the, the process of trying to, be forward thinking. But it's not, it's not far-fetched, right? It's not outside of, what we consider to be, plausible, because again, you have to say yourself, like you just said, Brother Phil, you guys kind of reiterated, Brother Chris, the rest of you guys found that at some point, when everything gets back, because we know the airline industry probably gonna be one of the last ones. Well, probably besides that and shipping, cruise airline, not shipping, but cruising. They already come out around about August, September, even for the cruise ships, right? They got these commercials like $28 a day for a cruise. At this point, they trying to lure people back. It's a mess. Good luck, right? But either way, you talking about massive fuel consumption type scenarios in terms of technology that really needs the oil market to kind of adhere to such a demand. Meaning they got to market the demand, number one, because it's gonna be hard to get people back in some of those kind of realities, and then they have to be able to sustain, right? So again, and they are talking about we're gonna hit another second wave around when? The fall with the coronavirus. So like dude, we just came out of the prison. Now you talking about we might have to go back into prison. I don't know, we have to see, right? We have to see how this stuff gonna play out, because nobody knows. So that's what makes it so ambiguous. But if I had my opinion, I would do just like that. I would take a couple of elite plays in it. Right? Find those sweet spots in terms of price. But I also keep that short-term, short energy alive too, right? I wouldn't come too bullish, because I know number one, I'm still dealing with a easy read in terms of resistance at $29, right? Just going off that last week, $28.91, somewhere around there, and secondary one resistance around about 26, right? And now the oil market has been trading in correlation to the S&P 500 for quite a while now. So guess what? If the market starts to roll back over at this point, what's going to happen to oil? It's going to come down with it too, right? So we hit resistance moving out on the S&P 500 at 295, and it's showing weakness and can't necessarily get out of his own way because it went too far too fast. Well, guess what? Oil market going to follow right behind it and follow suit. It can easily come take out this wick right here, about $18 a barrel. Hopefully, don't come take out the $20 handle. If it takes out the $20 handle again, it can get a little ugly again, down in the teens. Right, so it's up on a wing and a prayer. It's up on a chicken wing right now, literally. It's up on a chicken wing. So we'll see again, but that's just my take on it. Again, it's just been down, up and down for the past 3 or 4 days, about 17 cents here, 40 cents here. Nothing staggering. They kind of found a way to kill a little bit of the volatility in the oil market. I will give them that much credit. Of late, they have. Right, but we'll see if it holds. Right, we'll see if it holds. But those are the levels I'll be looking at. Myself personally. So something to think about again in that perspective. So, but yeah. So again, just
Yeah, the Saudis, the Saudi prince bought some of that Carnival. Remember that Carnival was actually when it was down at I think it was down right around the bottom, around $8 or $10. I think he bought some of that, and that's what bumped it back up a little bit. So it did.
Yeah, that little article.
Yeah.
So and then it's funny too, because the Norwegian Cruise Line came out not too far after that, talking about debt restructuring and possible bankruptcy, and then I want to say about 3 or 4 days ago, or 2 days ago, 3 days, trading day. Royal Caribbean Cruise Line comes out and says what? They actually started to book pre-cruises. And it started off the lows, roughly around about $36 and change, and ran all the way back up near 40 off that little newsreel. And then number one, they already had pushed their earnings back because they're supposed to have their earnings last week. Was it Thursday or Friday? They're supposed to drop the earnings, and they pushed it back into this week. So they sloppy over there, obviously, but but anyway, again, that little moment that it ran today, or I would say yesterday, I think it gave back, pretty much, all those gains to a degree, not all of it, some of it. So weakness is still there, right? The weakness is still there. They're trying to fight, the ideal that, again, they keep this thing above 35, they have a chance, right, to build some momentum and build a nice support. That's basically what they're doing. They're just buying time. Right? I'm gonna get ready to get off here in a second, guys. I gotta make a quick little run. But again, look where it's at in terms of what it has done off the March lows. this fugazi move, like this move right here, fugazi. On 29 went like 48. I got short. I shorted it up in there around about 41 and change. I bought some puts and I naked shorted it, right? When it was about 41, I think last week, what was like 30, Tuesday, 30, one of them days, Wednesday, whatever. Anyway, I bought the $35 puts, and them things started instantly printing. I think Friday or Thursday, I bought them winning it, going in the money. It sold off basically. It came down again around about 35, as you can see here, like 30. It was like 35, 84, 34, 70, somewhere around there, right? And so a lot of that happened. It's weird too when it went down to 35, 70, so after hour, but I sold it going into the close, made a good little penny off those little extended. And then it snapped back on that little fake news that they start to do some pre-booking for cruises for the month of August, that they're gonna try to open it back up for August to take bookings, right? They put out little shabby little $28, a day. They tried, the little polo tink like Cat, what you said, polo tink. That nigga just would not crank up. Get up, baby, red. Ain't no gas.
Good night.
We ain't no gas in that car. Ain't no gas in that car. Ain't no gas in it.
Yeah.
Ain't no gas in it. And it's still look at it. I commit this stuff up. Ain't no gas in this car.
Yeah.
No matter how they try to posture, again, they just trying to save face at this point. You can't even blame them. I mean, everybody hurt. They doing some drastic things. So that little bounce gave them from $35, and it was a wicked little bounce though. It's a lot of shorts about it there. You talking about 5 points. That's a lot, again, in terms of intraday sessions, a couple intraday sessions. But again, all it was a wash, rinse, repeat, because all you do is go back to the days when it was the same way when I got short on it, back around the 4th or the 5th, when it was back near $41, all it did went right back up there off this little what? Look at, and that was a what? With that evening star? And then what they call it, an evening star?
Yeah.
And that evening star, shooting star, evening star, one of them, and all it was reverse. It's so simple. I mean, when you saw it, because this was like just fugazi, and it just what? Gave it all the way back. Giving it all the way back now.
Yep.
Back 36, 34. Now here's what's up. You see what I'm saying? I'm talking about all that there. Let me give all that cheddar out there. Right? So, y'all know your brother, right? Y'all know I stay fishing. I stay a little fishing. Right? So where my I added to it though, because I was short above a little bit over 40. And I added to it, as it broke down yesterday, and I added a little bit to it today as it broke down today. Right. And it brought my average up pretty decently, because I had a small share, because I like taking a little smaller starter position, see if you can hold, and then I add to it on the way, and build up the position, kind of ride it, ride the momentum either up or down. That way the carrying costs ain't that expensive too, as I build to it. But my little Royal Caribbean, because again, I always try to find those ones who are just printing good, right? When they eating, they eat. Right? If they repeat offenders, I stay in them trades. I ain't no use to me try to get out of it. So my Royal Caribbean, you can see right here, I got 340 shares in it. I added most of that today. And my average, I was above like $40 and change in my average. Now I'm down to 39.10, right? And up near grand on that trade, right? And matter of fact, let's go here. Again, same thing I'm showing y'all that I showed y'all on the chart over there. I just knew it was a fake fugazi little pop, right? It was a fake fugazi little breakout on that little fake news, right? That's all it was. Like Trump saying, "Oh, fake news. Oh, fake news. Oh, fake news joker." Right? They tried. Tried some $35 here. They bounced it, ran it back up. It hit some resistance again, right around that point there. Couldn't make this stuff up. Right around this point right here. Right, that same point around about $41 and a little change. A little some strength for a little piece change. So I use my very old school diversionary tactics like I always do. See that VWAP right there? That VWAP is clear as day right here. That it broke below or got to it right there. And I start adding to the short right around that VWAP point. And it broke. Came down, chopped sideways in the bear flag, came back to it, right? But below 40, could not break below that whole dollar marker 40 right here. Resistance, right? And it dumped and went lower, right? And so I like to see that kind of resistance or that weakness. I just stayed in the trade. right? Stayed in the trade. Obviously, I got short on it. Obviously, on the back end of that, off that when it pulled back around that point, around a little bit over near $40 a share, around this point right here, right? When I got short on it, and I just kind of rode the wave, right? Rode the wave, right? Rode the wave. A little bit of shares that added most of the bulk of it today, right? And after that, it was just downtrend, to where it's at base now. So it can easily go back and test those lows that it did. Again, back on the 6th and the 7th, right? Before they turned it on that little fake news they tried to put out. So I'm looking for to break that 35.70 there. 35.80, 35.70. They break that, I'm going to really get excited. So I'll be looking, see how the market turns out. And again, after hours, y'all see what's happening. Look at Tesla on the 800. Not that he's gonna hold, because I know our Tesla is ratchet, right? But it's like I just need to kind of close below 800, and they're gonna find a way to try to get it back above 800 before 8 o'clock hit. All right, they're gonna try. I know how they like that. They'll hold all up, sentiment numbers like that. It's down to 79.20 at this point, but they'll find a way to try to close above $800. I'm pretty sure they're gonna try. Again, SP 500 right back down after I was in the futures market. It kind of spiked up. It always does in the futures market, and now it's kind of pulling back down. But it's wavering. We'll see how it's going to do for the rest of the night. They're going to try to turn it. I'm sure they are. They're greedy.
Yeah,
it's Wall Street, right? What can we say? That's it. So
did you get your credit for Tasty Works?
Yeah, well, I saw that you did it, but with Taste Work, I was looking at it wrong. You have to put in. They did this like guys, how TD Ameritrade were doing it back in the old days. They wanted you to put in like $1,000, and I was like, oh man, I thought if the person just signs up and fund it, but they'll if you got to put in at least $2,000 before you get any kind of perk. But it ain't no big deal. You still get like you get some points, but you don't, because they do it like a point system. Like if you get so many people up, you get a chance to win like iPhone or laptop, or you even can win a Tesla. If you get like a lot of people sign up on these. But if they fund it pretty decently with a lot of money, you can really get a lot of points. So I got a few little points, but it's not like a monetary like we get with the stocks. They do it like a point system. You get points, and then you can kind of like when you do put a little game at the little like Dave and Buster, you roll a little thing, get them little ticket.
Yeah.
A little pride. That's how you do it.
Okay.
Taste Works. So to build it up, you can get like an iPhone. Again, like I said, they got like iPads, a lot of little stuff, like neat little stuff. So pretty still cool, same way. You got to build it up.
Okay.
But yeah, thank you though, guys. If you haven't signed up for Taste Work, again, solid little option broker. For that perspective, in terms of, I use it definitely a lot for my options. Again, so. But yeah, really, really good setup with them. So. Excited about little Taste Works, whatever, building out their little scenario.
Mm-hmm. They're getting better. They're getting. They started just, they've been always in the marketplace, the owner and all, but his platform has gotten better over time.
I agree. It's gotten a lot better. And again, for me, having those you got little stuff like Webull, Robinhood. Again, if you full scale, then you move to your basis. The top dogs, your TD Ameritrade. TD Ameritrade runs circles around pretty much a lot of people when they come to auctions.
Right, TOS is nice. Yeah,
they next level with TOS on the auction side. But again, for people who slowly learning and then walking into again, just Webull. But then I would say when you graduate a little bit from Webull and Robert, go get that Taste Works. Taste Works is very good graphic user interface. In terms of being able to learn it, and then they specialize in options. That's one of the things that they pride themselves on, being a good options trading brokerage, platform. You can trade other options too, but it's really good for options. You know what I'm saying? So so I had my biggest option trade obviously through them. So I definitely don't, I guess I use it as a good omen, as they say. When I crushed that STMP trade, that stamp trade, right? Them contract like 20 cents a piece. I bought a 5-piece chicken dinner for $1, and that thing paid out about $8,000.
Wow.
Yeah, they're like $1,600. What? Remember $1,600 a piece per contract? On 5. So, whatever the case, it was a great little trade in. Yeah, man. So we'll see how they get. I'm sure they're gonna get better as the time goes by. So, yeah, I would say for God and country, OT. Yeah, man. Yeah, we're gonna get there. Don't keep it working. So, but yeah, I guess I'm gonna get ready to get off here, guys. Again, I got a couple of things to do.
I appreciate it. Yep.
Yeah, definitely. Yeah. Any last words over Patrick? Or Pat, excuse me, over Phil, excuse me. Last words from your family.
Just great content, and everybody stay safe and keep putting in the work. That's what it's all about. So.
Agree. Thank you for that too. And I always, you always welcome here. You already know how I am, man. You always welcome here. Anybody as well in the back chat as always. So thank you all for tuning in. Over Chris, any last words, fam? Anything?
Keep your eyes open. We like the all seeing eye. You gotta see everything.
Right.
And pay attention. And just keep at it, man. Marathon, not a sprint.
That's it. Facts. Again, wrong. I don't even use that now. Kindle wasn't built in a day. Right. The Great Wall of Benin wasn't built in a day. Right.
Right.
The Empire wasn't built in a day. Right. So, in the same likeness to you learning this, and you taking it serious to the point where you can see value, you find value in it. Maybe not so much in the short term, but what will come in the long term, you see that you're on the right track, right? Because you see all the potential, literally nearly right at your fingertips, right? And with the proper, again, time that you put into, building on your skill base, building on your value of reasoning to get your discipline up to par, because that's how you make money in the market. You have to have really good discipline. And there's another way around it. I could talk about, the amount of losses I had that were just, very undisciplined type of little moments. Again, banging, be up, and then give it back. And I said, man, this is unbecoming. This is just not crazy. I mean, you literally got $1,000 in your hand, and like somebody just comes snatch it away. And you sat there and watched them do it, and you just sat like, paralysis of analysis, like a deer in the headlights. Like, well, why did I let that happen? Right? And that's the hard part for some traders, right? It's sometimes even selling when you up. You got to get to the point where you have to have a very robot disposition when it comes to at least that aspect of your game, right? Because you're going to have a chameleon mentality throughout this whole process. You got to be a chameleon in the market. You cannot be one way. You cannot be staunch or myopic in this marketplace. You will get chewed up. You got to know how to bend and fold with it. Audible, again, I keep using Paperman as that kind of a symbol, right? Because he was a really good audible quarterback, right? Change up on a second. Have you all over the place. DBs be like, oh, dang it. 3-4, nickel. Oh, no. Go home. And they think, and he's like, God dang it, what a joker they got. Right? And he burned you. So that's Jay Powell right now. Jay Powell trying to do everything they can at this market. They're messing everybody up. So you got to be willing to, audible, make sure you stay flexible. But more importantly, you need to stay disciplined. So above all, due diligence and discipline. Build your good discipline game. Build your good defensive discipline game in terms of your mind. So that way you don't feel as if, that you kind of, wavering or boxing to a corner where you don't have, a outlet valve or some kind of level of a backstop. Because you got to have a pressure point or a switch where you say, okay, no, this is good, right? Either when you're making money, or when you're losing money, right? I've seen it both ways, right? So again, my biggest loss in a day was 17.8. Yeah, it was like 17.8, and that's with 1,000. On that thing, I was 17 grand in a day, and
was it a bag or was it just a vapor? Did it happen quick? Did it happen quickly, or was it a bag you were holding and was trying to get out of it?
It was in a day. Now it was in a day. Definitely was a day.
Okay.
But it was more the way it happened. It was like, man, it's like there was a couple things that happened within it where I was up and I got beside myself and tried to do something, and I came back and I was down. So it's like always down. Try to recover, and you say, okay, I'll double a little bit here because if it turn, at least I could pad some of that. And then what happened was when the market makers kept saw people average out, because they see this stuff, right? They ain't stupid, right? They see people who are buying to the stock whether they know they're going long or short, but instantly they deflated at a point where big shares come in at a point where the stock just didn't drop, a point or two, they know that's a catch-up trader, right? He's trying to play that bottom to kind of get a pivot, or that's a person that's averaging down. Because when we see bear flags, they're doing what? They're going, right? They kind of step. And so anytime you try to play that step, right, what do? They give you a little small, then they go, oof, right? And they shake out of it because at that point they have a mandate to kind of what? Shake out all those traders and people that got stop loss. They're trying to go get them stop loss at that point. It just kept add a little bit. I said, God dang it. And then, I just like a deer in the headlight. I'll never forget. I was like, you know what? Never again. I was just numb for like 2 or 3 days. I could not explain this stuff. Right? And I was like, I was lost. At that point, I was like, man, I was like doing in my mind, because I was on the street like Ross Cameron, like warrior trader. I was on a run, right? Because I think at that point I had went up roughly around about. I think I went up roughly around about that, like 28,000 in a period of about maybe 3.5 days.
So you playing with house money anyway, so it didn't hurt too bad, I guess, right?
Yeah, but here's the deal. That was just one day. That's 17.3 or 17, like 17.8, somewhere around there in one day.
That's right.
So when you have that kind of loss, what did that do to your psyche?
Yeah, that's true.
Yeah, that messed you up.
We talking about 17 racks in a day. If some people can take it, ain't no big, right? It's just 750. No, I was because I had been doing so good before that. You gotta understand.
Yeah.
I was like, oh, this is great. I'm doing everything right. And then I was like, so you instantly, what happens to you the next day? You become what? Skittish.
Right.
It's natural. Natural. I was like skittish. I was not on my A game. So everything I seen that was kind of like hey, it wasn't that kind of scenario.
Well, you know what Steph Curry says: if you're a shooter, you got to keep shooting, right? And you'll get out of it. So
right? You don't care about the shots you miss; you just keep shooting, right? Don't worry about the shots you miss. I used the theory. It took me about 4 or 5 days, to be honest. It took about 4 or 5 days to kind of get that kind of, that kind of back. Because everything after that was just like ugly. So 17,000 that day. The next day, I might have gained, maybe like 300 back. Small victory.
That's right.
The following day, forget about it. Another $2,000. Another $2,000 and some change to the downside. I say, oh man. Right? So I said, again, still trying, get your foot in skittish. I wasn't looking at the way I was looking at when I made that 28 on them 3, and I was rocking. And again, y'all know the markets, because the markets ain't gonna give you the same kind of day every day. You're gonna have to deal with different circumstances, different energy, sentiment. The market ain't there, and you trying to get back some of that loss, kind of make you feel good about yourself. If the money ain't there and ain't no expansion in the market, ain't no volatility, you squeeze the blood out of the turnip. That's how you get burnt even worse. Because if everybody's in the zone and they ain't really about to come to play that day, what people gonna do? They're gonna take their truck and leave. So the market decides to say, hey, and you stuck, right? You're gonna force it or you're gonna get ran over, especially if whatever the direction of the market's at. But either way, ultimately, in about 2.5 days, it was about 3.3. I gave back roughly around about maybe like 23-ish, it was like 22 or 23 of that 28. Right, that crushed me.
Almost all of it.
Yeah, exactly. So my whole mentality was just shook. I was just shook because I was like, oh, and this was weird too, because I remember when the trade, matter of fact, was that it was that CHFS, if I'm not mistaken, right? Because I kept calling the Chiefs, right? I remember telling Eva Camille, that's when I was training her a little bit too, and a couple other people that and I was like, man, the Kansas City Chiefs trade. I remember after it was just parabolic and it kind of pulled back, and I crushed it on the way back down. Made a little bit on the way, but I crushed it on the way back down too. And that day I had ended the day. It's weird too, because on the first day when it took off and it did that, made a little up and I made some on the way back down and kind of turned when I'm saying when it kind of parabolic up and it came back down, it actually gave back the game, most of it. I made like, gosh, I want to say like, was about 14 grand that day, right?
Mm-hmm.
And that was my biggest intraday trade, right? That was my biggest intraday trade. And I'm like 14,000 something. This is back in, and this is until I go on. It's been like about 2017. It was like 2017, right? It's going back 2017 in terms of intraday. And so I was like, okay. And then again, the next day I woke up, I probably go. I got receipts somewhere. I always keep them in screenshot. But the next day I hit another good home run. You know, I hit a nice home run, and I went up like by 8 or 9 grand. And I forgot what it was I was trading. I had to go pull those old trades. Y'all got me reminiscing. But the third day I caught another great run. Right now I picked up like about 5 or 6 grand in that day, and so I think I ended up around like about 28 somewhere around there. In 3 days, all spark on that trade, that CHFS trade, and in fact, let me see that. I think it was that CHFS trade. Broke down memory lane. I gotta get off here. And then I was like, "Where you at? Come get this work." All right, was it CHF? I believe it was.
Chef? Was it Chef?
Yeah, I think it was.
Chef
It was that
CHF.
Because it went parabolic. Was it that time when it went? God, was it the CHF? It had to. No, it wasn't the CHFS. Or was it? It was man, what's that ticker symbol? It was was it? No, it was. It was. No, it was something. Man, I can't. I had to go pull it up. I got the receipt somewhere. I just got to go pull up. I want to say cheese, but I know it was CHQ. So one of them was. I don't know. I have to go pull it up. Yeah, I'll try to look for it real quick. But either way, next time I go live, but yeah, but that was it. Like I said, that was my words. But I learned a lot. I learned a lot from that, and I got.
You always talk about the lessons. I always consider the money that I lose. I mean, that's tuition. That's what I look at it as. Because I mean, I always try to play with house money. So if I hit it, I'll pull out whatever and keep adding to my. I got a long term. Like if I see some, Twilio or Google, if the price comes down, or some Amazon, some long term something, you just grab, shares, because you can actually do, if you get 100 shares, you can do a covered call. You can, right. You can sell premium. You can do, so it's and then if I'm playing with house money, my wife doesn't give me a hard time. That's how I look at it.
Right. Yeah. I went on the bush. So. That's why I love women traders, female traders, because they have a very resounding resolve when they have their mind made up. Mm-hmm. They are some of the best traders ever because they understand, a lot of men don't. Sometimes bravado gets somewhere a lot of men, right? Men ego, right? Again, we practical creatures, mm-hmm. right? We train that, and how we go about doing things in a very clean profession. We leverage, right? Women be like, no, I'm gonna take this little bit here, girl. That purse money here, right? And you be like, I can get a little more out of the thing. Next thing you know, it's a wrap, right? Sister then took that little bag and went on about her business because she's like, So, but for us, again, it's the same thing. So it's about keeping our mind, understanding the parameters of what it really entails to be a profitable trader in terms of the discipline. You make money by being disciplined. Simple as that. Mm-hmm. I don't know how to explain it the other way. You make money by being disciplined, right? Because again, it ain't hard to really learn an indicator, oscillator, understanding the patterns. When you make money by being disciplined. You have to have a game. At least the majority of all trades ain't gonna come with a game plan. I get it because some things just happen, right? Some stocks just take off, and if you kind of seen enough to kind of give you some kind of level of stability and comfort that you see that okay. I may not know all the fundamentals at this point, all this, and you take it under the strength that the price action enough is alone to kind of carry the trade. Then you just kind of looking at key points on the level 2 when when the buying kind of dries up and it flips on the ass. You're watching the spread and all that stuff. You can just trade purely on the price action, make a little bag and get up out of there. But typically, you still have to have a value of discipline. Say these are my breaking points. This is my breaking point. This is my my final point. In my line in the sand, I'm not gonna cross that. And after that, you have to trade with the mindset again that when you hit that buy button or if you hit that short button, if you shorten, and if you can walk away more than you had when you first started, that's a victory. If there's more being made at that time, don't look back. The hardest thing to do also with the human emotion is to see that you could have made more money, right? And so again, you have to learn how to be indifferent to that reality. You have to learn how to be indifferent to the whole psyche behind the idea that, oh man, I could have made an additional $700. I could have made an additional $2,000. I could have made an additional $5,000 today. I cut too soon. Well, ain't such things too soon when you had no, nothing when you came in, you left with something, right? It's hard to kind of square that in your head though, because you just keep looking at the thing, keep going up. So I always tell people when you see scenarios like that, when you close out a trade and you make profit and it kept going the direction you want to go, two things to happen. If it goes above an additional 70 cents to $1 of what your position was, go to another chart instantly. I know it's hard because you want to see if it's going to do anymore. Go to a entire new chart or get up and go do something, right? Get up and go get your little drink or something, a little coffee or whatever you do. Get away from your computer, change your screen to another a ticker symbol, whatever, and focus on what you just did right. Focus on all the things you just did right in that trade, and don't look back, because you'll never never be able to pick the bottom, and you'll never be able to pick the top. I don't care how good of a trader you are, right? And so until you learn how to have that kind of mental disposition and your discipline, you'll always find yourself trying to chase the next high, right? Trying to be one up yourself, because you ain't competing with nobody but yourself. That's what I love about the market. It's competition between you and them charts, right? You and that ticker, right? So that's what you got to square inside your head, that you have to be comfortable with getting the bag, getting those base hits more than just kind of always trying to go for the home run, because it's a superficial mentality to tell yourself that, okay, well, I can look at a person like Ross Cameron. Okay, he done made $8,000 a day, right? He's doing that every other day, I can do that too, right? Well, again, your style, your schematics, how you go about playing your game and your strategy may have some coincident moments here, but it's not the exact same. So you have to be comfortable knowing what your limits are, what your threshold is, right? What's your your point, again, your line in the sand, right? If you try to prove that you can be a profitable trader from a generating revenue income perspective, and not saying I could make $1,000 a day and then I'll give back $970 of it tomorrow, that ain't the business, right? That stuff look good on paper. You got to learn how to put that in your bank account. You need to be able to send that to your bank account, right? The greatest tranche of that, right? And if it's $100 that day, right? And even though, again, like I said, you could have made this, that, third, if you can send that 100, that means you compounded it, your gain back. Right. The ideal of that you having more consecutive wins than you are either giving back money and also just losing outright. Right. So you have to get to the point where, number one, you don't overtrade. Right. Worst thing people do when they first come in, the excitement, the euphoria. I know it's an energy like none other. It's the idea that no one gets to tell you how and when you can make your money for a change. It's like a liberation. You like Color Purple, Nelly crying and crying. It's that kind of energy, right? You looking at the blind like they're gonna come knock on your door, man. I just made all this money, and people gonna come check me. Gonna come but you realize that people are making a killing, in this industry for a long time under these same, the same level of criteria. Here it is that now we have an opportunity to do just that. When a lot of people look at this, they're like, man, stuff is this, is that, is gambling. I'm scared. I can't. Only rich people do it, and I can't know if I could do this. But everybody in the back of their mind always has said that I can't wait to trade stocks one day or be an investor, right? I want to invest one day. It sounds good until you actually, think about that. You got to put forth the patience to learn it. But that's the easy part, right? Because again, it's just free time. If you learn how to be resourceful, I should say. But the hard part comes through the mechanics, right? I'm saying actually doing the work and not tricking yourself out of everything that you studied and doing the opposite once you get into the trade. I've seen that. I've done it. Like in the beginning, what messed me up because I had beginners look out the gate in terms of day trading because I was already long-term invested. But when I actually got into day trading, I had that beginner's look and it spoiled me. And again, I go all the way back at that point when like me and people like Stock God, some people don't even know us days. And, we go way back. Bat, scientist,
Bats, all those guys. I remember when you guys started that. I was on that.
Phil and all you guys, Cali Raw, Sister Q-Tech, I mean, everybody, Mondo, I mean, ATL Trader, Money Green, Sal, I mean, everybody, Blueberry, I mean, we can go, Mag, I mean, come on, y'all know we had a great little group. We took it serious, so we just did all throughout the night. I mean, we would do the live stream on sale by 7, 8, 9. Finish around by midnight, 11, 12, sometimes 1 o'clock. Leave the live stream on YouTube and go right back to Discord room and spend another
Discord. That's right.
Joker be up when the bell rang and Joker just be starting to I'm finna go sleep by the hour. No, you ain't, Joker. You can go watch this market some more. But that's the kind of sacrifice. It took that level because we did like a bench crash course on learning how to be proficient. We utilize each other's strengths, right? So you got to have a good group of people around you who have that same level of intensity and passion you did, because it showed. I mean, you was there, Phil, and you saw how everybody was like, okay, man, I'm sure I don't want to go to sleep, and like, Joker's like, let's go look at some charts, let's go pull some, and then and people like Mr. Lloyd, Mr. Lloyd, them get
excited. Yes, exactly.
Let's go to on demand. We go to TD Ameritrade on demand. We go to livestream.com. Therefore, they had all the new stuff today. We had them old school conference call, free conference call that come here. I put a chart. We going to the charts, right? To the charts we go. And again, we just going through trade, replaying the old trade. I'm looking at right here it is. I see it right. And so it takes that kind of passion, So again, I came in, very fortunate. I came in that kind of fireborn environment. Well, I'm very thankful for that. And so for us, again, it's the same thing. Some of us are new, some of us are not. But you need to always have a steady cadre of people who can give you that straight and narrow, right? Not blow fluff and tell you that this is a, make all the money you can moment. An aspect that, you always going to be, no, it doesn't work that way. You have to have a level of discipline, unlike anything you've probably ever done. Some people come with it already hardwired within them, but you realize very quick the way that the market, again, Barry White, what's his name? Barry White, Barry for the Detroit Lions.
Barry Bonds. Oh,
no, Barry Sanders.
Oh, Barry Sanders, yeah.
When the market does a Barry Sanders on you, because we say Sanders, market put a Barry Sanders on me last night. That thing pivot on you a couple times, right, bruh. Right, you learn. You're gonna get learnt today, as they said. You're gonna get learnt today with the T on it. Very fast, right? Not to have, let your emotions get in the way of your what, your evolution, right? Because that's one thing that stops, mankind. That's why mankind fall, right? Because emotions, right? When you build something good, emotion get all his and stuff. Now you fighting, and core. You gotta learn how to stay, keep the evolutionary energy of what you're trying to accomplish intact. And for me, just go out and do what you do naturally. Have fun at it. Have fun, make money is my motto for that reason. Because I understand if you can have fun at making this kind of money the way that we have the ability to, there's no cap, no ceiling. And all it requires that you have to have a real strong discipline game about you, a good defensive discipline game, not defensive that you're scared to trade, but defensive to the point that when you know it's time to go, it's time to go. Whether you up, down, or sideways, and not necessarily. Once you set your targets and your goals, you have to be able to stick to them. Right? You have to be able to stick to them, and that's how you become again, in my opinion, profitable trader, and consistent. What I should say. So it comes with up and down, but what you always got in your favor, and I'll leave on this. What you always got in your favor above all things, again, that this market ain't going nowhere. Other stuff will crumble and fall. Presidents will come and go. Wars will come and go, but they is not getting rid of this dang on casino and gambling, if you want to call that a market. They not left. No.
And plus, you're talking about the tools we have now. So we have access to. I'm an IT biz, so you have access to, just all kinds of technology. Yes, obviously, the more you trade, the more toys you can buy. You can get better screens, better all the things that you need. But at the same time, it doesn't matter, right? Absolutely. Yep. And this marketplace, there's no discrimination. It's all about the zeros you have in the account. and then you grow it. So it's just you against the, you know, so there's nothing. I mean, obviously the initial capital and the knowledge, but time will take care of that. So
exactly, that's exactly the point I was going at for that reason, because once you realize that, again, as we say that, we don't say it superficially that it's a marathon, not a sprint. You have to really realize what it really entails when we say that. You know, again, it's not, you know, looking at people in a way to try to like, yeah, man, it takes time. You know, it ain't being facetious like that. It's just saying, hey, you know, you really realize that it ain't going nowhere. So you don't have to try to force feed it or force, you know, square peg into a round circle when it's not necessary, right? Give yourself some time, right? Because again, it ain't going nowhere. If you have to paper trade the market to get used to all the movement and all that, how you would feel like if you did with real money and just to see how this stuff worked in real time, if you could do that for about, honestly, I would tell people, if you can paper trade at least 4 months before you do real money, you win it. At least 4 or 5 months before you actually start doing real money. Because what happens is real money spoils people. It's the idea that I can take this 100 and turn it into 1,000, right?
Right.
And you say to yourself, okay, what's the probability of me being able to do that, you know, on a consistent basis, right? And not again, you know, it ain't gonna happen every day, right? I mean, it can't, but you know it's not gonna happen every day. Let's be honest, right? Sometimes you gotta take that $10, that $7, you know, that $30. If you because you're talking about, you know, $30 on a, you know, on $100, you know, that's basically what, 30%, right? You know, so to get 100% bang in the day, it ain't uncommon. You know, it can happen, but you just got a chance to double your money in the day. Right? You have to be in the right place at the right time, the right place too, right? So to get 1,000, again, you ain't even gonna get that through the equity side of the house unless you find a banger that runs up 70, 100% a day. So typically you got to go to the what? Option market.
Options,
that's expansion. That option market, you got to have that expansion. I've been in a few of them like that. Again, y'all whatever they are, but you got to find the ones that got been expansion. So again, that's the probability that you're dealing with. So you say to yourself, well, how do I get it to where from here to there? You got to do it what? Gradually.
Yep.
See what I'm saying? That's the part about what we learn. Exactly. You earn every moment because you get to see it in real time like a slow motion, and you take more onus of it once you had to really, you know, again, I don't necessarily say work hard for, but to really, you know, to be patient through it. Let it evolve. Let the opportunity evolve based upon you doing it. Get it to that point, the what, why, where, and when, and then let the rest of the market do what it's going to do. Because again, the market is brutal. It pivots. It does all kind of crazy stuff sometimes. So that's what makes it not an exact science. That's why people like Neil Tyson deGrasse and all these people like these astrophysics. That's why these people, you know, again, they'll get skunked in the market with all that knowledge that they you know, they have when it comes to that stuff. They come over here, it's like, bro, you might well get in the back seat. This is not your no, this ain't your wheelhouse.
He may be a genius in science, but this ain't that type of science, right?
Man,
here.
Run that joker back to the Mars. Run that joker right to Mars. He be like, man, they get one of these shoes about this, man. They think whoop me today. Right. Like, hey, kudos to y'all over there. Y'all some real warriors. Right. But again, it's about understanding that all you're really trying to accomplish here is just use these again, these y'all like I like to call them what? You know, these vehicles, right? You know, these instruments, these vehicles, you know, basically what they are, right? Monetary vehicles in terms of these stocks, and you're just trying to get to one point to the next. You know, it might be a little short little ride, sometimes it can be a little longer, right? If it's gonna be a little longer ride, you got to be a little bit more what? Strategic in your itinerary, how you trying to map out that trip, right? Again, when I say I take a longer position on a Boeing or a Tesla, because I know how they move in big chunks, when I'm trying to catch them at the peak, to ride that trough, and then once it flips, watch and repeat, you know. But you have to catch them in those moments so you can eat off one stock for about 2 or 3 days. And so I try to figure out a way to do that where I'm not trying to fight the market every day to find a new stock, right? If I find those ones that can keep feeding, you know, 2 or 3 days, I'm gonna ride, right? So that way I can add into it throughout the day when they have the expansive drop. You know, take some product on the table when it snaps back a little bit. I add more, you know, back to it and just feed up that one stock, keep my average at a certain comfortable place, and then 300 a day, off that, 200 profit out there, take 400 off of it today, right? Go find another one like that. It's like y'all know, like you go and do a little check down in the hood. You come to shaking, what you got today? What you got for that today? Right? And you find scenarios like that. And again, everybody has the method they madness, but you have to find that kind of reality where you can do that. And then you just build it from that. And then when you have those days, when you have the mad money trade, I said mad money trade, those gonna be those just runners out the blue. Right? He's like, okay, what's this about? It's banging. And everybody come in. Again, what was that trade today? Grubhub.
Yeah.
I could have easily been this one to say, go man, get long the thing. Get long the thing around about 58. Get long around about 55, 56. Because it got halted about 56. I think around about 56 plus it got $54 or 54 or 56. It got halted early when it first took off. And instantly you're supposed to tell yourself, okay, that was a feeder for us to getting it up to that point from 47 to 54, and it got halted. As soon as it opened up, what did it do? It opened up, obviously, it had good news for people that missed it. That first initial jump couldn't wait to get in, right? Because they was like, oh, and it took off. It squeezed up and went up to like $64. So I could have easily bought it long and rolled the extra, $7-8 profit, $1, dollar profit per share, and then turn around and say, okay, once it got extended, separated from the moving average, and what? That's what you're supposed to. Short it back down a little bit, play the pivot, get out of it quick, and just see how it rolls from that point. But when those trades surface, that's when you're supposed to be ready to take advantage of it, right? And that's a part of being disciplined. Sometimes it's sitting in your hands all day, waiting for the right trade to happen. Sometimes it be like that. I will wait an entire day some days, all the way up to the last 15, 20 minutes of the day, and take a trade. I've done that. I've been there. It's no clear way to. That's why I say you can trade the market. So it's exciting for that perspective, right? You're not at some particular, like you're on the clock on the job. You only got an hour left. That's it. It's barbecue mildew. After that, it's right. You got to get up out of there, right?
Yeah.
Market kind of like hey, you pick and choose when you want to work. Within that time frame of allotted to you, when the market is kind of doing what it's doing. So if nothing appeals to your psyche in the first part of the market, no matter the fact that stocks are spiking up and going all over the place acting crazy, if it does not meet your criteria or your setup, don't trade it. Don't trade. You learn more about watching it than you actually trying to put your real money into it and trade it. And I've been burnt a lot of times doing that at a point. I had my ups and downs, whatever the case, but that's just the reality of it. But again, you're just trying to find a way to be consistent. That's what it's all about. So at the end of the day, so it comes with discipline above all things. So again, strong mental disposition, understanding that obviously inculcates the ideal of a good disciplinary, game plan that you put before yourself every single day before you go into trade. Realize that this is not, just a slot machine environment. You take that approach, you're gonna get your behind handed. You're gonna get your behind handed to you if you take that approach. There ain't no other way around it. And then you're gonna say, this ain't for me, and all. You know how that comes. It comes with a lot of kind of regret. And all because you didn't want to kind of adhere to the basics, right? And give yourself enough time because it ain't going nowhere, right? Just how you build. Again, ain't no other. Again, that's the only thing I give Jim Cramer credit for. I mean, you're not going to find a better investment vehicle and opportunity out there, literally on the planet, where average Joe at McDonald's can obviously increase their wealth ratio value. Literally overnight, we say overnight, over a gradual period of time that it would took them to go to college, get a job, get a managerial position, move from that to a direct executive branch manager, something like that. You would never get this kind of opportunity nowhere else in terms of an income generating machine at the markets if you learn how to do it efficiently. Where you can take an average person and train them at the age of 15, 16, 17. By the time they hit 21, 22, 23, they're pretty much set for life. Yeah. Right. So that's the energy you have to take, and it's never too late. So if you're in your 40s, your 50s, your 30s, doesn't matter. Age is not necessarily even a deterrent in that perspective too, because now you're just a little bit more seasoned, right? And you understand a lot of the money mistakes you might even you're a lot younger. You would never do this when you get a little older because those dollars are hard to come by. You be a little bit more wise with your money, and so that's why they have different tiers of investing. Again, volatility levels, right? Right. And so moderation, high risk, low risk, mid risk, where you're at in your risk tolerance. Right. If you could be high risk in your 30s and 40s and your 50s, Well, then you know what you have to be very sharp on your toes, right? You have to equip your game to be able to deal with that, right? So that's all it is. But you can do it. It's just that you have to put in that work, right? And replay things out in your head over and over and over again. So when the trade opens up and it does the complete opposite, you say what? It was not my setup today, right? It ain't like you did that wrong, just wasn't your setup. You don't have to force it. Just don't trade it. Find something else, or just say, you know what? I'm gonna go do something else today. Because guess what? You can come back the next day and your setup unfolds, and you make up for that you didn't make the day before. You make it all up in that next day, and you make it a little extra. So if you say I want to make like about $200 a day, well, if you don't make it that previous day because nothing really unfolded, your setup didn't happen. The next day, again, we like to say that the stock universe, the stock gods, and bless you that day. You hit a nice little mover, right? You pick up about $600-700, right? You pick up 2 days worth, 3 days worth of work in one trade on that next day, which passed you for the previous day that nothing happened. So guess what? You can sit still even the following day if you want, or go do something else. You don't have to feel like you got to wake up the next day and try to push that to the limits next day. If you open up and don't see nothing really happening out the gate, back away. Keep that bird in the hand, right? Keep that bird in the hand. Close out the week up $600-700. That's how you build a consistent game plan. Eventually, that will morph into a bigger perspective or a bigger cachet, right? $700-800, a grand, right? A couple grand here and there. I mean, y'all notice like when you start making that kind of money a day, I mean, you like, shucks, bro. This ain't far-fetched. Again, we see people make that kind of money and they like, man, it's light day. You like, light day? What? Yeah, man. I hit 20 yesterday and they be talking like that. You like, oh, come on, bro. But that's the opportunity that it instills in your mind to have you always constantly chasing that opportunity, right? But you convince yourself that that's the bar. That's not the bar. It's not the bar. The bar is consistently being able to make what? $200, $300, $400, $500, $300 a day, $100 a day. That's the bar. Set your bar reasonably low so you can accomplish it and hit it a lot easier than saying I can make $1,000 a day. Because even at the minimum, if you did $100 a day out of the 252 days that's allotted to you in the trading in the markets, that's 25 racks extra at the end of the year. Extra. That's also have extra income. Now again, if you make 200, well, you just double that. That's 50, right? If you make 3, well, what is that? What's 3 times 252? You up in there about $70 grand. $70 grand, $300 a day, and 250 days out of the year. That's about $70 grand a year. That's good money. And you doing that from either your cell phone, your tablet. You can do all that stuff on the run. Your tablet, your laptop. Again, that's your command station. You on a date, getting the bag and pressing your little date. Hold on, excuse me 1 minute, man. Let me make this bag real quick. There we go. What was that about? Yeah, I just picked them out, made like $500 real quick in that trade. Really? Yeah, I just made $500. Well, what do you do with it? Well, that's what I do. So it's that kind of, I would say freedom of it that makes it, unique in its own perspective that keeps us excited about, wanting to get better. Right. And so it's the same with me. So I got to get better. I already told myself I ain't got no choice. Right. Right. Because again, not only for the value of my family, but what I know it can do for the overall fall of a lot of us who come together in moments like this, so we can feed off each other and get even stronger. And you get somebody else that's new in the fold, get them, going in the right direction, because they ain't bought into that delusion of grandeur kind of, chatter. Y'all know the people out there like that. Oh man, you can do this, and they just blah blah blah, and then they ain't giving you the straight and narrow, right? They ain't giving you the skinny. Right? Those people are toxic. You need real people around you, so the market will beat you up.
Yeah, man, and the nice thing about it is, as people are listening to you and listening to terms that you use, now they can Google them and they can research and so they can follow you. And if you start, you're talking about cup and handles and you find look studying charts, all that stuff. I mean, if you put in a little bit of work, I mean, over time, it all becomes, you understand the language. You know, it's sort of like learning a foreign language.
That's exactly what it is. It's like understanding, again, you know, a foreign language, you know, that has revealed itself to you, right? And you understand all the little nuances of it, you know, the different inflections, you know, in the voice, the vernaculars that come with it, you know. Again, that's when you get fancy with this thing, right? Yeah, you build a slang out from it. I mean, so you can always personalize it to your liking, right? You're not stuck in a, you know, in a you're not stuck, you know. So again, the goal is to get to a point where, again, you don't feel like you ever have to, you know, feel like you don't have the ability, even at a point in your life where you feel like you're a little bit old, that you missed the bus. This ain't that kind of skill set, right? This ain't one kind of scenario like that, right? It's like, man, I could have been LeBron James, man, back in my day. Well, guess what? You could be a LeBron James in the stock market because age ain't a factor. Youth, strength, and all that stuff ain't a factor, right? It's about what the greatest muscle you have is that this is how you get your money, right?
Yeah.
Right. These are things to help you get there. These are your instruments and your tools, right? Your tool belt. This is where you get your money up here, right? And so, real quick, on the way out the door here, right? Just to show you, right? We talk about age, right? We talk about, right, the body and the mind when it can come together, even at certain points where you are in a position where you can, snap back, so to speak, right? Snap back. All right, so hold up here 1 second. Keep me out, brought back in. Sorry about that. I've been riding hard all day. All right, I'm gonna end it on this note right here from good old. I wrote a song about like here you go. Where we at here? Okay, yeah. Let me do this right here. They say can't teach your old dog a new trick, but I bet the different. You got to give them the right tricks. You got to put them in front of the right tricks. You can't just give them any trick. You got to put them in front of the right tricks. Right. Right. When it's time to get right. Yeah, I see that. It's time to get right. Right. See, you already know. Y'all already know where I'm going. Some of y'all have already seen it. Back, bro. Be back, bro. Let me roll that beautiful boom footage, right?
Oh, shoot.
Yes, goodness.
Yeah.
Oh, come on, let me bring that back. Man, why is pinging? Hold up, man. See, that stuff that make you get upset. Because I know what's going on here. Let me close this out here. Hold up 1 second. I know what's going on here. Close out all this other stuff. I've been riding hard all day. My little pewter ain't took no breaks all day. I feel like, man, you been stressing me out. Hey, boy, this morning, man.
Running like a champ.
On to my just like Buddy getting it in on the. So again, age ain't nothing but nothing, boy. They ain't gonna play right. It's gonna ping for some reason. I guess it's retarded. Anyway, some of y'all have already seen it, but again, I was literally watching. I passed by YouTube maybe a couple days ago, and they got the old reruns of Mike Tyson got this little podcast he do called Hot Box. And again, since we've been social distancing, they ain't really bring nobody in, so he got a lot of old stuff, and they trying to bring in whatever. Okay, but people didn't know that he was going through some training during this whole time because they had the so-called celebrity match in the place. So if you watched him on the little thing, you know, like, man, Tyson had like a little gut. Y'all know you smoke a lot of pot each day. You living a good life, right? Smoke, you call it that. Smoking pot and just chilling all day. Tyson guys lost that weight, boy, got in that gym, but he hit that thing like he was back like 20-year-old Mike Tyson. I said, boy, you're going to kill somebody. Yeah, 53 years old.
Have you seen the first one over? The first one?
It's 2 parts to it.
Yeah, the first one they put out. Oh my God!
I gotta check it out,
man. Yeah, I'm gonna put it in. I'm gonna put it in the back in the investment group.
Yeah, I gotta check it out. This one I know this little clip had been circulating all over YouTube there. That's it. Well,
you know what? Hold on, I might drop it in the chat real quick. Oh,
go ahead. Yeah, go ahead. Let's look at this thing here. Play here. I think it's TMZ too. It could be End of Day in the TMZ, but anyway, Tyson looked, man, that joker that lost that weight, that gut. And again, he trying to play a little celebrity match with him and Evander Holyfield. But I use that just as a way to say, again, once you put your mind to it, man, again, I ain't got to be one to give you that old, charity speech. But y'all know what it is. Again, and this, I'm just using it as an example for what we do over here. If you take your time, you can put yourself in a position where you can, again, be the champion you need to be, right? You can find yourself in that position, right? And from there, again, that's what it's all about. So, so let me run over here. Hopefully it'll play on the YouTube better than, I know it's so ragged behind TMZ and everybody on the internet this time of day anyway, too, which makes me even horrible. So we popping and pinging and carrying on. And let me see if I can pull this up here next. I'm gonna get off here, guys. Yeah, so let's see if we can see the young warrior, right? Oh, young warrior from what town is he from? Is it Brooklyn, Queens? Where you from? Queens.
Yeah, he's from Brooklyn.
He Brooklyn. Okay, I thought it was Queens or something. Yes, Brooklyn. Oh, Brooklyn Brahma. All right. Let's see, Tyson getting in. Brooklyn. Punish.
You want to get that ring.
Punish.
Oh, they're just repeating it.
Google's premium video meeting. Now free for everyone. And it's right in your calendar.
Soy Lucas, tengo 4 años y soy paciente.
Hello again, everyone. I'm Ariel Hawani. Hope you're all doing well. Good to talk to you for a second time on this Monday. And what a great pleasure this is. We're talking to the head man over at King's MMA, a legend of the fight game.
That's just a guy. But yeah, you can go pull up on TMZ like I was showing y'all. Try to show you for the little regular behind things start pinging the pop. But that clip there, boy, that repeat with that boy. That joker hitting that thing like he was about 20 years old again, wasn't that joker got joker ribs on crunch time a little bit, right? Like literally, you can't do with them body blows like that. Oh, young Tyson. Right?
Tyson. Getting that ring with that man and that celebrity match.
Well, it's going to be Evander Holyfield. They already trying to put it together. I don't know if you've seen Evander Holyfield. He also had a live stream he did with soundbite on TMZ, and it's like with this whole celebrity match. About 3 rounds, the match with Tyson, bring it back. So they kind of already setting it up. It's going to be kind of like that. But yeah, the way he was getting after that bag, watch him. Wee. Woo, 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 woo. Let me see if it played fluidly. I know it played fully on played fluid. Just raggedy. Young Tyson, boy. They're saying that just old. We there looking like Methuselah, boy. We hit that thing like he about 20 years old, bro.
Yeah, man.
Warrior out there. Yes, goodness, man.
He still got it.
Yeah, man. Tomorrow look good on them feet, didn't he? What's going on over Sunline? Good to see you in the house, family. Peace, power, private, man. Thank you for coming through, fam. You know, wrench over there. So again, just in closing, again, you talking about a guy that's kind of, at a point where he just, you feel like he's beyond the prime. Look, man. Again, once you got it, you don't lose it. That's the whole point of me wanting to show that. Once you got it, you don't lose. Now, you may not could be as swift as a person that's maybe, 10 to 20 years old when you're told, but that don't mean that you still can't accomplish your goal, right? You still can't, don't mean you can't, still have success. And so again, it's that same kind of paradigm. You have to stay, diligent. You have to stay, true to your craft. But once you got the skill set, once it's inside your head, your repetition don't lose you. And that's the point, I guess, I'm really trying to emphasize, because again, you see Tyson hitting that, going through that sparring moment. It's like, man, he was doing that stuff when he was like 20-something years old. And he the joker at 53 years old because that repetition stayed with him, right? That hand structure staying with him, right? The bob and weave, most of it stayed with him, right? Regardless of the fact he may not be as fast as he was back when he was younger, but it stayed with him, So the market is just that. Repetition becomes repertoire, right? Repetition becomes repertoire. The more you do it, the more you see it, the more you touch it, the more you observe it, the more you go through the schematics of doing it, the better you get at it, right? But you're doing it at a point where you're just being more disciplined and conservative when it's necessary, and you be liberal when it needs to, but you do that through a level of hands-on approach. That's why I say paper trade 3 or 4 months. Give yourself that kind of level of leeway to really see the markets in different lot of facets, right? And then come in with your capital scenario like that. Right. So again, you ain't losing that, trust me, because they ain't gonna shut it down, right? They is not gonna shut this market down. So again, I just want to end on that note. So again, thank y'all again for coming through. It's been a blast, man. Again, can't thank you guys enough as always. As always, let's keep working hard. Let's keep grinding. Let's keep, building out our opportunities. Let's keep building our dreams, and take this thing to the next level. Right? Let's take this thing to the next level. Right. So I'm gonna close out here. Where may okay, yeah. Is it still? Oh, it's not here. Okay.
Thank
you always, man. Thank you for that link too. Again, everybody in the back chat that came through, over Sunline came through. I see that brother GPJ. Thank you for coming through today. Over Brandon in the house. Thank you for coming through. Brother Mathis came through. Brother Teague, as always. Thank you family for coming through. Everybody came through. I might have missed in the back chat. Mr. Maroon, man, thank you for coming through today, fam. Everybody over Caesar. Anybody in the back chat that necessarily didn't type, but I know you're probably still hanging out with your brother. Thank you for coming through. Again, I will be over here. Again, like I said, till I get my little YouTube situation set up on situated on the other channel. But again, y'all know how this stuff go. We just migrate to the next scenario where we can keep getting it in. It don't stop. It doesn't stop. And we'll still kind of be, pick up right where we left off. So no harm, no foul. Even though they call foul on us over there on that. Even though the guy was still cool though, because like I say, the guy said, he's cool with it. I'm just waiting to hear back from YouTube. They the one, acting like they acting all ratchet. The guy was like, hey, no harm, no foul, man. I understand what you're trying to do. That's good. So I got the email, so I got to wait to hear back from them. But anyway, I hit my Ralph Smart moment. Infinite waters diving deep once again. right? Stay healthy, stay well, right? Peace. All right, guys. So peace, power, profit. See you guys again on the battlefield, on the training field, first of all, then on the battlefield again tomorrow when the market opens back up. Trade safe, choose well, and stay green, my friends, guys. Until then, salute, family. See y'all guys on the next one.
Peace, power, profit.
Peace, power, profit, over. Peace, power, profit, everyone in the back chat as well. Thank you guys for stopping through.